Top of the morning, traders, and happy Friday, January 2nd. Welcome to the most value-packed live trading show, where we live trade, breakdown charts, cover high-impact defense, and talk trader mindset. Hopefully, everyone had a great New Year's Eve. Hopefully, everyone's having a great New Year. What happened last year stays in last year. What happens this year stays in this year. Today's a short week, of course. It's a Friday, first day of the year. So, foot off the pedal. If we just follow our protocol, today's Ramp Down Friday. For the folks on YouTube, if you want to join us for the delay-free, ad-free stream, jump in the Discord for free, absolutely for free. The link will be posted there once we get to 50 likes, and you can join us delay-free, ad-free. Again, let's get the show started. Good morning, good morning, good morning. Nice little gap up. Let that 1 minute candle close. 5-minute orb army. You're on the clock in 5 minutes. Okay, so all my 5-minute orb army folks, you're on the clock in 5 minutes, and that's what you look for. All right, that's what you look for. So now we're flirting with that 50% retrace on that weekly, which suggests that we're just in the middle, smack dab in the middle of last week's action. We have a new monthly candle, guys. We have a new quarterly candle, new yearly candle. So inside on multiple higher time frames. In that case, when it's inside, don't decide. That right here is that TOG 685.39. We have 686.71 as our PMH. Right out the gate, we're seeing the Dow fall off a cliff below PML. Decisively, we're seeing the Qs trying to make a push into PMH. So right off the bat, we're mixed bag. Okay, we're not decisive. There's no synchronized selling, synchronized buying. It's a spy stuck between a rock and a hard place. Okay, so let's see what does take place here. That yearly open, keep this marked on your charts. 685.71. 685.71. That stays on your chart until 2026. Okay. If we're below it, we're red on the year. If we're above it, we're green on the year. Very simple. 26. Okay. So forget what anyone else says. That's the official level. We're going to dodge that gap here. We're going to dodge that gap. Let's get that equilibrium going at G50. G50, good morning, guys. Good morning, everyone on YouTube. Make sure to like the video. Make sure to subscribe. Let's get the likes up. Let me open up the chat in our Discord chat. Gap update. Thank you for the update, Elian. Good morning, good morning, Hero. Good morning. I'm looking for calls this morning, but we'll see. Absolutely. Thank you for taking the time to do that this morning. Absolutely. So if you missed it, we went over the exact way I go over the levels. Very, very simple, very straightforward. You want to make your process as simple as possible, okay? That's one way. All right, so when I craft my game plan, it's a mix of those levels of certain areas. So there's a little bit, when I craft my game plan, think of it like this. 85% objective, okay? 15% subjective, meaning I want to see certain areas and expand those areas just subjectively, all right, using my own technical ability, all right? So the game plan kind of encompasses what we already know to be true, along with what we could potentially see take place in that area with directional biases in certain areas. Because a level itself, guys, there's no directional bias based off of a level. It's just a level. So the way you approach a level, right, is not a directional bias. It's a reactionary bias. What kind of reaction are you going to get off that level? Based on the first reaction, second reaction, third reaction, you can start building a bias. Okay, that's the mistake a lot of people make with levels, right? They're not designed to give you a bias. If we get a retrace reject off that key zone there, I'll be there for it. 5-minute orb army's on the clock. Again, I highly recommend everyone sizing down to kick things off today. All right. But again, up to you. You are the boss. You are the boss. You are the manager of your account. Okay, you make the final decision. 5-minute orb army is on the clock. And we are below VWAP. If I can get a retrace reject into this territory, see what it gave us, guys. This is a key zone. You guys see. All right, so now when I said earlier a magnet, I'm paying attention to this key zone if it turns into a magnet. If it does, I know exactly what to look for going to second shift. Okay. So you see, there's nothing that I did where I said, I feel this level should do this. I feel. It's not, we're not going down that road. We're just looking at what the market is doing itself. G50's at that 683.82 territory. Good morning, everyone on YouTube. Make sure to like the video. Make sure to subscribe. 5-minute orb bombing on the clock. Everything's falling off a cliff. IW below PML. My goodness, IW fell off a cliff. Dow falling off a cliff. The only thing really holding us at the current moment is the Qs. If the Qs fall off a cliff, everything's going to start to slide. Back-to-back days of a slide to the downside. Will be interesting to see. Let me pull up those puts. I'll take the retest off of that orb. Oh, that orb. Okay, look at that orb, guys. So it looks like an orb on paper, but really, this orb is a compound break because that G50 is right there. So the D50 is right there. So that orb happens to be at the equilibrium of the day. There's no more coincidence in 2026. Okay, you're going to realize the longer you watch, there's no more coincidence. All right, you can clearly see how the price algorithms are moving. We're below VWAP. See if we can get a nice retrace reject into this key zone between 685.38. Let's see if we can even reach into that territory. That'd be great. I'll be there for that. Excuse me. Good morning, guys. Good morning, Nico. Happy 2026. Good morning, everyone on YouTube. Smash the like button. 30 likes. We can get 30 likes very quickly. If you're a first-time viewer, welcome aboard. Tesla did report their delivery numbers this morning. Came in line with the estimates. But for Tesla to make that parabolic move, it needed to get that 500. If you got that 500,000, that's when Tesla would probably made a move. Wants to come and test that VWAP. You can expand this slightly into VWAP possibly. All right, you can say, hey, you know what, VWAP. So initial bounce off that G50. VIX hugs 15, we hug key zone. VIX hugs 15, we hug that key zone. Okay. Orb army, 15-minute orb army. Stay on the sidelines. Not yet. All right. So put a me in the chat if you're taking any trades today. If you're taking any trades today, put a me in the chat. Okay, type me in the chat. If you're not taking any trades today, don't type anything. So you want to have a good idea if you are or if you're not. You don't want to be on the fence. Okay, you don't want to be on the fence. See if you get a nice little push. Get a price action combination in this territory. Push back lower. That'd be great. First thing I'll look for off that key zone. Now we're starting to, again, the Qs dump. The Qs are the only thing holding up. Dow already dumped, fell below PML. IWM fell below PML aggressively, continues to dump. Came and tested that VWAP. So you get one more push to the upside. Like to come closely into this territory. But I did retrace reject already. If your zone is a little wider, maybe you can put yourself in position for that. But again, keep in mind, don't lose context. This is a Friday. Everything you're trading this week is a 0 DTE. Okay, so nice little retest off that VWAP. Retrace reject off VWAP. Okay, so now if you take this nice rejection, when it goes back into the orb, you're already in the green. So see, makes sense. So now when it's back in the orb, you're already in the green. Okay, so Gary, I see you. Okay, you're looking to take a trade. Firefly. Hero. Okay. VIX is going. The Dow is the only, the Qs are the only thing that's holding us up right now. Okay, the Qs are the only thing that are holding us up. If they start to falter, we're going to start to slide as well. If you take a look at the Dow is just selling off. This is a nice little retrace reject right here. Maybe I was just being a little too picky. All right, I want a price to come into here. Came close. It did test V up and reject. If you did take that, just manage accordingly. Okay, that has room to that G50. Right, if it can hold below that at D50. All right. So we are in the jaws of the gap up. We are in the jaws of the gap up here. We are in the jaws of the gap up. That was nice. If you caught that, that was nice. That's a systematic way of catching it. Ideally, if you still want to babysit it, see if the VIX can stay above that 15. That would be favorable. If you can do that, that's great. VIX is starting to go. Okay, look at the indexes. Okay, look at the indexes on the hourly. Excuse me. Okay, this hourly candle, it is the extended trading hours candle. So it has 18 minutes left on the clock before it closes. But you can see everything is selling off. Everything is selling off, and gold is looking to break down here, like we discussed in the PM pre-market show. Okay. Somewhat of a downward compression potentially. Somewhat of a downward compression here, possibly. We'll pay attention to that. We're still between PML and PMH. I have not marked that PML PMH yet. So PML 683.82. That's what I got. Anyone else have a different PML? You guys likely have a different PML today, especially if that PML candle came in at like right off between 4 a.m. and 4:10. Sometimes, depending on the platform, they might have different PML, depending on how they draw it. 683.82. 683.82. Okay. You got to be kidding me. Look at that, guys. The PML is right at that G50. You can't make this up. Again, another compound level. So do you see? So this is two levels in disguise. Now just one. So most traders are seeing this as a PML. What they don't see is that that's a PML and a G50. So if I get a sweep and a reclaim above this, I'd like to take it back to 684.52. Okay. Get a nice little break. Again, I'll still wait for that key zone interaction. Retrace, reject off it. 15-minute order might be 2 minutes. Okay, 2 minutes. 2 minutes. Okay, me, Mixon taking the trade as well. Happy New Year. Wishing everyone happiness and prosperity for 2026. Appreciate it, Alan. You too. Everyone in the chat. It's a new year. Happy New Year. Wishing you prosperity as well. If you're a first-time viewer, make sure to subscribe. Long-time viewer, subscribe as well. All right, our goal is to hit 3K. Can we hit 3K subs by the end of January? It's very doable. I believe we can do it. All right, so I need your support to get there. I need your support to get there. As far as the recipe, guys, the blueprint, nothing really changes intraday. That's the reality. All right, we're still looking for the same things, same setups. What I'm doing during the first month, first couple of weeks, right? If you look at the seasonality chart in January, take a look at that, especially during different election cycles. Okay. During midterm years as well. You got to look at that data. All right, so maybe I'll get some graphics that illustrate what kind of a performance we can look to see. All right. Okay, nice little downward compression break. Reclaim with that 684.52. No separation being made away from that 15. So to stay net short, you want that VIX to stay above 15. So they're not really compensating anyone at the current moment. Just scalpers. Okay, if you're a scalper, you can maneuver your way through this. We're moving about 78 cents per 5-minute candle. IV sitting at 15, 15ish, 14ish. All right. Okay, Sanjay's looking to take a trade. MU's out of here. Yeah, MU is the number one performer in S&P. MU's out of here. All right, so we got to wait for that. MU PMH break, blasted past it, all-time highs, 303.02, VWAP 303, 303.02, 302.08 is the most shallowest entry I can think of. POC and VWAP. Outside of that, you have to wait for a key level. That's the only thing, but chasing it, continuations do work until they don't. Right? But keep a close eye on the IV and all the other factors as well. But MU right out the gate continues to push. Google as well. Google broke out. We had a Google on breakout watch. Okay. Sorry about that. All right, we're starting to see a nice little push. MU leading the way. Who else? Apple up 1%. Nvidia 192. Semiconductors are running. MU up 7%. Baba up 4%. Uber up 1.5. TSM 4.5. So semis right out the gate are rocking and rolling. And look at the Qs. Qs are above PMH. So Qs are the only thing really holding us up. More specifically, the semis and the Qs. So the mags are performing well. XLK is performing well. SMH is up 4%. SMH is up 4%. See what kind of interaction we get with that key zone. If I get a price action combination, I'll look to take it to the downside. If not, if it gets above it, respects it, I'll look for that retest and use my risk as that TOG as my risk into the upside. The other side of the orb is coming up. So no setup, no trade there. All right, so the best way to maybe if you got that VWAP rejection, but nothing there. So we're above that orb, the upside. AMD's rocking as well, done for the day. Lost G a lot. On the orb, 5 minute. Me, okay. Okay, for the pre-market low. Again, guys, treat this as a ramp down Friday. For if you're in the Discord, ramp down Friday is a protocol. Okay, we're above that 5 minute orb. The Qs are rocking and rolling. Good morning, Ronald. Good morning. Wait for those confirmations. Okay, I posted that confirmation sheet, especially for the folks who do trade the orb, right? The way to filter out those setups. I highly recommend using that framework. All right, let's go to it real quick. It's posted in here. Okay, go to strategies and go to this sheet here. Okay, 5 and 15 minute strategy. Okay, so on that level, this is what you want to see. These are the two things you want to see: either the retest or the continuation. There's a couple of things you can look for as well. You can add the engulfer to that as well. But if you see this, if you see a shooter, bearish or bullish on the 5 in that territory, more than likely it's going the other way. All right, so this is basically what I recommend, highly recommend, or that's what I would look for in that territory to exercise caution to avoid getting trapped. Okay, so now if we take a look at the orb down here on the 5, guys, if we look at it, you can see that turned out to be a hammer. So can you scalp out of this as that hammer's forming? Absolutely. But for that follow through type of setup, that's not ideal. All right, so make sure you guys review that and have a good understanding of that as well. So the Qs are looking to retest that PMH. Again, everything is starting to bounce off those lows. Sponsored by semiconductors here. Sponsored by those semiconductors. Okay, we're above that PMH now. We're above that PMH. I'll be there for the retest. I want the long position. Into that daily upside breaker. Yeah, the upside breaker is right there. So we have room. So once we reclaim that key zone, we have room. We got above that weekly for 50% retrace. We have room from there into that daily upside breaker. So that was a compound break. That was a compound orb. See you can come back for that retest. See you can come back for that retest. Good morning, good morning, good morning, everyone. Make sure to like the video. Make sure to subscribe. Now we smacked right into that PMH. 680, 671. $686.71. 686.71. 686.71. So in this case, we need the Qs to get above PMH. The Qs can hold above PMH, continue to sustain. That'd be great. I'm still leaning towards that Magna type of day, guys. If you're looking to take that retest, let that 5-minute candle potentially at least close above that prior 5-minute candle's high. You want to avoid that thing closing as a shooter. You want to avoid if you're using the orb. If we can come into this territory, into that key zone, that's what I'll be there for it. So right at that. So what would invalidate me is if we get back below VWAP. Get back below VWAP. Looking for a reaction between that 685.71, 685.39. Okay. Nice little downward compression break. Excuse me. Okay. Look at that candle. Look at that 5-minute candle, guys. Okay. So they trapped downside, but they gave it room to run. They ran from here to there. So rejection off PMH, and the Qs are quickly recoiling. The Qs are quickly recoiling as well. They're back below PMH. So now the names that ran the most, names like MU, see if we can pull back into this territory. 303.08, 302. Okay, so $1.08 range. If you want MU off the orb, 306.40, 15-minute orb, into more all-time highs, right? Into more all-time highs. One-minute combination. It bounces off of this, bounces off that level. So it comes right into it and bounces. See if it's sustained. I like how the VIX is just falling off a cliff. See, that can continue. So if you took that orb retest, you define your risk. Maybe your risk is VWAP, maybe your risk is POC, wherever your risk is. Okay, after defining it, if you're already in, your target can be those highs. That PMH. Just keep a close eye on the VIX. Again, guys, make sure to like the video on YouTube. Make sure to subscribe. Happy Free Trade Friday. But you can see on the 5, if we break below this candle's lows, it looks like we're going to go the other way. Right? Shooter, rejection off that VWAP, rejection off that PMH. All we need to do is break this level and turn it bearish. If we can break above those highs, we continue. So what I'm looking for in this case is a nice little drop, come into my key zone, and go back out. All right. I can try to take it up there, but that's going to be a little too wide of a risk for me. If I can keep my entry as close as possible to this territory, at least I can use that VWAP as I can encompass the VWAP into my risk as well. So if I get below it, I get invalidated. If I get the entry there, then I can no longer include the VWAP in the invalidation point of the trade, because by the time it gets to the VWAP, it's probably going to be down 25 to 30%. And that's beyond my threshold. All right, so see if we can get a nice little drop into that key zone. If we can, that'd be great. If you already allocate a risk off that retest, off that orb, just know where your risk is. Just know that you don't want price to break below these lows and close below that 685, 93. 685.93. Excuse me. Nice little bounce. Again, this weekly, look how close to these levels are tying to one another. Weekly 50% retrace happens to be the top of the orb. Right? Weekly for 50% retrace happens to be the top of the orb. IWM, what a reclaim of PML and IWM. Look at IWM, guys. What a recovery. Okay, right out of that key zone on IWM. And IWM is back above that PML. Okay, continue to go downward compression into that area. That'd be great. Continue to go downward compression and then finally come into this area key zone and then finally make a run at that resistance and then break it would be typical for me. All right. So that'd be the first idea here. I'll be waiting for. First idea off that retrace reject in that key zone never came to fruition. Excuse me. Good morning, happy New Year. 50% first trade. Was that off that orb trap? Yep, inverted hammer on the 5. You got it right on the money. Mixing. If that hammer breaks below it, we can work our way back to VWAP, and that's fueled off of that PMH, right? Rejection. We came into PMH, right, and then this wick, this is turned into a wick on the 5. So this impulsive push translated to a wick by the time that candle closed. All right, so if we take a look at the criteria as far as those entries on the 5-minute orb, right? So when it breaks, you don't want to see the shooter, the inverted hammer. You don't want to see that. What you want to see is a decisive close above it for that continuation or a break, retest of that level. Okay, no trade so far. Still waiting. See if we can drop into that territory. That level is holding. And we're not violating those lows quite yet. All right, we're not violating those levels quite yet. Violating that. If you take a look at the 5, this is the battleground. So the bulls can't let price break and close below that red line. What they need to do is either keep it inside, keep price contained within that range, or get it above that 680, 685. Okay, 680, 685. That's what they need. If we start to break, you can see there's a massive M5 fifth, M5 inefficiency here. All right. So now here we go. This is what it looks like. If we break above 680, 645, this thing can start to rev up. So now it's a 2-1-2 break. Okay. Right, if you're getting involved in this territory, if your risk is defined, your first target is PMH. Excuse me. First target is PMH. Above PMH is that daily upside breaker, 687.36. $687.36. That minus 50, Gary, was based off of that trap down here. Excuse me. Excuse me. Okay, VIX continues to fall off a cliff. So we went 2-1-2. On the 5, we went 2-1-2. Okay. Again, I'm still leaning towards a potential magnet, guys. The only thing really driving us higher is SMH. SMH is carrying. SMH is carrying us. We're dragging some of the other indexes off of those lows. As far as sectors are concerned, all the sectors are, the XLKs are green. XLY is slightly green. XLF is XLC is flat. XLF, XLV, XLP, XLE are red. XLI is green. SMH is green. So SMH semiconductors right out the gate to kick off the year are the ones that are in the lead. Okay, they're taking that nice little lead. Again, guys, make sure to like the video on YouTube. Make sure to subscribe. Make sure to like and subscribe. So no trade so far. So 75% of the chat is leaning towards being a bull today. We got 40 plus people in the chat, 8 likes. Make sure to smash the like button, guys. Let's get 40 likes. We can easily get 40 likes before 10:30. Let's shoot for 30 likes before 10:30. We can easily hit those numbers. All right, 40 plus people tuning in. All right, I couldn't get it quite to come into this key zone. If you're here, if you allocate a risk here, right, maybe you're sitting through a little bit of, tiny little bit of drawdown. You saw a drawdown. Had to be a little patient, not a lot of movement. Did come into that PMH, that first target. All right. Let's see if we get some follow through. So on the 15, the Dow's reversing already. On the 15, the Dow's on reversal mode. So we're currently in this runway between PMH and daily upside breaker. See if we can sustain that. My first shift, if we make clear separation away from key zone, that magnet will be off the table. Again, look, it's coming into that PMH, reject off that PMH. So in this case, what's going to be critical is entry. Of course, this downward compression break reclaim of 684.52 was the most, led to the biggest move to the upside. Outside of that, we're just kind of just chopping around between that PMH and that weekly 50% retrace. $15 points on the prop. Beautiful, beautiful, beautiful. No trades here. Being cautious. So treat this as a regular Friday, guys. Ramp down Friday is a protocol. Ramp down Friday is a protocol. Semis continue to run. See if MU's pulling back. MU view, not pulling back quite yet. Wave with the orb, that could set up nicely. The 1 minute wave is setting up. So this break comes into these highs, grabs those highs, creates another shooter, another inverted hammer shooter. That's what I'm looking for. I'm looking for a nice little drop. Okay, structurally break this. Come into my key zone, start to base out, show some signs of life. I'll take it back to upside. All right, so I don't want to get caught buying at a premium. I want it to be discounted slightly. If it slices right to that key zone with minimal hesitation, I get invalidated. So I know that that's my invalidation marker there. So between that 685, 38, 72 territory. So if you took that, that's what it looks like if you're on a 5-minute orb camp. TADD is technical analysis, due diligence, okay? So meaning I want to pay attention to what takes place in that area. That's what I'm waiting for. That's what I'm waiting for. If it happens, good. If you're already in that 5-minute orb, I already gave an opportunity for 53 cents the upside to target. So if you're targeting the second target, you're down to runners. You're on babysitting duty, that's fine. But always, always, always good habit to take some profits. Okay. Always a good habit to take those profits, okay? So we're seeing some resistance up here based off that PMH. Who thinks this is a PML to PMH type of day? PMH to PML. Do we go from PMH all the way down to PML and then work our way back to the upside? There's clear resistance. We can't refute that based off of a key level. If we do come into that PML, I'll be there for the sweep as well. So I'm paying attention to that territory for signs of life, some signs of bullish activity. That 5 can clear, that'd be great. Smash the like button on YouTube, guys. We have 49 people joining us on a check-in. Good morning, good morning, good morning. We're live trading SPY, 0 DTEs. All right, it is Friday, so size down, manage risk. That's gonna be the best risk management. Okay, the best way to manage risk today is being picky, not trying to trade everything, and using less size. That's gonna be the key. All right, we cannot eliminate the fact that we have to take risk. Yearly open, 685.71. Keep that on your charts for the remainder of the year. Dip a little lower, that'd be fantastic. Just come a little lower. I'll be there for it. We did get a nice sell block there. If you went the other way off of that inverted hammer, right? That's your first target, second target, third target if it continues to push. But on the way, make sure you're taking those profits. Okay. See if you can drop a little lower here. If it goes price action combination, I'll take it back the upside. There could be a little more selling left off of it. If it gets back above 685.97, I can take it as long I'm gonna let it continue to sell off and get deep into that zone. Let that 5-minute candle close. Ideally, that 5-minute candle, if it can close, break below that 5-minute candle's low, start forming a hammer, that'd be fantastic, ideally. Okay. If it just breaks above 685.97, I have to take it. So we'll let that close, let that 5-minute candle get below it and start the wick. Okay. Let's see if I get a wick there. If I can, I'll be right there for it on that 686 reclaim. 685 on reclaim. Okay, let that close out. Let that sell and clear. If it slices right through with minimal hesitation, drops all the way to PML, then there's no trade for me to take. Just trying to filter out. VIX is starting to wake up here. Okay, so you get a nice response. 1 second, sorry, this is frozen. See if you get some signs of life. No signs of life, no trade. Okay, look at that sell off there. See if you can wick. No wick. No trade, right? So just based on waiting for price action, that kind of just saved me a trade. If I get that nice little reclaim, I'll be there for it. We're back below view up now. This looks like a dash from PML to PMH. To PMH to PML, sorry. Okay, now we're below PML. What a drop. We're below PML. We're below that key zone. Wow, what a drop. So there was no trigger for me to take it to the upside. Now rejection off that PMH for the second time was beautiful. Look at the Qs. Qs falling off a cliff. So 2 ideas didn't come to fruition. So this had enough fuel. If you take a look at that 5, you see that hammer, that shooter, inverted hammer. All right, wick, pushing back the downside. So this is the area that I want to get involved. That key zone. In the case, safe in the case, if I did get involved, didn't wait for price action confirmation, because I liked maybe the environmental conditions as far as maybe what the VIX was doing. Okay, then I just get stopped out. All right, so say here's a scenario. Okay, this is the idea. In this case, say if I did take it and a little early, try to front run it, and get below the VIX, get below the view up, I'm out. There's no reason for me to get wiped out. Okay, the intention is either to works out or stop out, not wipe out. That was just a mean, aggressive, ugly trap. Nice rejection off PMH. Okay, so now we're headed back towards PML. Back to where we started. 10:14. We still have 60 minutes left until second shift. My calls didn't fill. That might have been the best thing that happened. All right, that might have been the best thing that happened. The fact that your calls didn't fill. So we saw some aggressive reaction in that PMH area. Aggressive reaction back the upside. Once we reclaim that 684.52. Now we're coming to push into PML. See if we can sweep PML. Okay, smash the like button on YouTube, guys. We have 50 people joining us. 50 people joining us. If we can, excuse me, if we can get to 50 likes, which we can easily do, we'll do a giveaway. Okay, we'll do a giveaway for boot camp. Boot camp is coming up. Make sure to hit the like button for the giveaway. We're going to do our stream until 1 o'clock. If you're a first-time viewer, welcome aboard. Long-time viewers, take the next steps, join our community. There's multiple ways to do that. We'll go over that at the top of the hour, bottom of the hour, okay? At 10:30, we'll go over the features of the community. My goodness. Anyone have any puts? Any bears? Any bears in the chat? Mixon had those puts. Beautiful job, Hero. Look at that, guys. So I want to see if we get the same kind of thing take place off PML. So we get some sort of hammer on PML. Go back the other way. I'll be there for it, and look how quickly the VIX has woken up. Excuse me. Okay, let's get the likes up. Like the video. First time viewers, drop your state, your country in the chat. I am streaming from the East Coast. Okay, we got people from all over the place joining us. Okay. The Qs and SPY are at the PMLs. The real reclaim is right here, right? The real reclaim is if we can get above here. Right? Real reclaim is there. Double bottom type of formation. We need, in that case, we need that continued rejection off that 15 on the VIX. If we can do that, we gravitate back towards key zone here. Good morning, Carlos. Beautiful job, Hero. Beautiful, beautiful, beautiful. Sometimes the setups are just, of course, everything is obvious after the fact, right? But show its hand up here. Double rejection. Rejects multiple times, breaks below it, couldn't hold that key zone, slices right through it, and now we're at PML. If it continues to trend to the downside, waves are waving. The folks who do take the orb, again, excuse me, if you take the orb here, you got stopped out, okay? And if you take it here again into PML, maybe you're back at break even. That's the 5-minute orb. If you're on the 15-minute orb army, 684.14 is your calling card. So you're already in the ripple. If we continue to sell off, what's next, guys? That gap fill. What gap? The gap from this morning. So there's a yearly opening gap. It's weird because it's the last day of the week, first trading day of the year. All right? Last day of the week, first trading day of the year. Kind of throws you off, but if you know what you're doing, you know what levels to use. Anyone babysitting runners for those puts? If you are, what a way to kick off the year. I was looking to take 2 trades. None of them really triggered. Didn't get the price action combo I wanted to see. Excuse me. Man, this cough is... 4 runners, beautiful job. Is your entry above that this here? If your entry is north of that daily open, 685.71, right, you're laughing to the bank. Took too many trades on the way down for a quick scalp. I'm sticking to my rule. 2 trades today. I usually take 20 to 30 times. Usually trade 20 to 30 times a day. I'm fighting through the urge. Great job, Tujin. I like that. 2 trades. All right, and that's gonna be tough to fight the urge in the beginning, but once it becomes habit, once you see the benefit, your brain will start rewiring. Your brain will start getting rewired. Tremendous job on doing that. And you already caught a scalp, so you're good. So I'm noticing a lot of you are using. Excuse me. I'm noticing a lot of you are using the props, which is good. And GR, you still say no? I just have a cough. I have this lingering cough. No fever. No runny nose. No nothing else. Just a lingering cough. Everyone in my household is fine. I'm just the last one fighting through it. It just comes and goes. It likes to come up at nighttime and in the morning. During the day, I'm good. Yellow circle's my entry. That was a nice structural break there, Hero. This thing wants to fill that gap possibly. What a drop. I'm going to shut it down. Have a great Friday. Absolutely. Tujin, if you're done for the day, guys, it was a huge opportunity. Right here, continues to sell off. Nice retrace reject off that PML. And looks like it wants to go fill that gap at 682.25. Q's falling off a cliff. So now those names that were running, like MU, let's see what they're doing. Okay, names like MU that were running. All right, they're pulling back slightly. TSM was also running. TSM fell off a cliff. 312.99 on TSM. Pay attention to that. AMD falling off a cliff as well. AMD retrace reject or bounce off 219.08. AMD collapsed below VWAP. Nvidia back below VWAP, back below that PMH. See if you get a bounce off, a reclaim off that 190.27. If we start to see a bounce across the Qs and SPY here. So the gap from this morning has officially been filled. The gap from this morning has officially been filled. The gap from this morning has officially been filled. If you're using the TOG, BOG methodology, it's been filled. As far as the daily, guys, we're still inside on the day. Still inside on the day. 70% for Harry in the chat. Good. Hold and run on 25%. Beautiful. That's a great TP, final TP Hero off that gap fill. Beautiful execution, guys. Anyone else on YouTube? So 65% of the chat is still leaning bullish. 65% of the chat is still leaning bullish. 50 likes, we'll do the giveaway. We need to hit 50 before 12:30, so we can do the giveaway at 1. So let's take a look at that. That was the fall from grace. Okay. The fall of all falls, all right? So if you see, it goes 2 up, 2 down, continues to sell off, and now, okay, fill this gap. The gap from this morning has been filled. Yep, you're absolutely right, Elian. We're working on that gap from December 22nd, right here. And we're working with this gap now. Let me take this off. Okay, so we're working on that gap. Should have our game. Look at the Qs. Remember what we said on the Qs, guys? That weekly equilibrium this morning, and the game plan. Look, right, weekly equilibrium. Look at the game plan. We talked about how that weekly equilibrium will be critical on the Qs. Turned out to be a monster rejection there. Everything is sliding to the downside. Look at gold, right? We talked about on gold as well. Gold, structural breakdown on gold. Bitcoin. Bitcoin surprisingly made a sneaky move into 90. But what did it do? What did it do? Came to 90, rejected once again. How many rejections is that? 1, 2, 3, 4, 5. At least 5 rejections. If you look at the lower time frames, this maybe can equate to multiple rejections. But on the hourly scale, at least 5 rejections. 5. Strong performance, way to kick off the year, Hero. So looking to get involved. Okay. So first shift, they paid both participation groups. They paid the bulls, they paid the bears. If you got stopped out multiple times, you're following your risk protocols. Okay, you should still be just another trade, just wrong on the trade. If you're looking for a dead cat bounce into PML, that's available. And that's NVIDIA. Let's go to SPY. The level that we can see for that retrace reject is between that 683.52 and 684.13. In this territory, I'm leaning towards going a little long, risk reward. We made a massive push to the downside. We fill that gap, reclaim a BOG, send us back into 683.82. That looks interesting. Okay, let's see if we get a 5-minute combo. We're at that daily downside breaker on that from Wednesday, right? So we took out Wednesday's lows. And now we're starting to reclaim that territory. See if we can reclaim into 10:30 is 3 minutes away. So if we can stay in this territory between 10:30, sweep of those lows at double bottom would be the way to go. All right. Invalidation is a continuation. Okay, so what this means is this low that's coming up, guys, this low that's coming up, that's tied to that daily downside breaker along with that first shift low is going to be critical. All right, if we sweep these lows, go back to the upside, or if we treat this low as if we break below this low, treat it as a retrace reject, that can to say a lot. Okay, let's see if we can sweep those lows. Smash the like button, guys. 50 people on the check-in. All right, so the best line of thinking is continuation. Okay, or first shift gravitation back towards key zone. So a lot of the second shift from 10:30 to 11:30 is going to be based on how we interact with those levels. If you are bearish, you're leaning towards looking for a structural breakdown of a flag. Simply put. Okay, no pun intended. Or pun intended, okay? There. So you want that structural. Let that accumulate. Okay, and then breaks down. That's your calling card. Does that make sense? VIX is above that 15, so that's leaning towards being bearish. So if you're just joining us for the first time, make sure to like the video, make sure to subscribe. Folks on YouTube, check out the short video that goes over the features of our live trading mentorship community, and we'll see you on the other side.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signals service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next level.
Okay, welcome back, guys. Again, if you're interested in joining our community, use the code TRIAL25, TRIAL30 to get 25% off the monthly. We have 15 spots available for January. 15 spots left for January, so make sure to take advantage and join our community to be part of our pre-market plan, trade ideas, and all sorts of resources you get to unlock. So we're officially in second shift. Let me know how you guys did in second shift. I took no trades in first shift, so basically yellow so far. Bears, you want to pay attention to the structural support. You want to break down that support. That's what you want to look for. Allocate your risk to that. See if you get a 5-minute reversal, potentially turn into a dead cat bounce. For us to really go long, I want the VIX to go back below 15. Back below 15. So this flag here is just kind of this is just a collision with the wave. There are no major levels in that territory, so it's just based on the fact that we have that formation, that flag formation, upward compression, and the waves. So it's more of an EMA style of setup rather than a key level on top of that. If you're waiting for that key level, then the closest key level we have that's above us is 683.82. That's the closest key level we have the closest key level we have above us. Closest key level above us. Okay, starting to work our way back the upside. So that 5-minute candle has triggered. That 2 down, 2 up. See if we can make that run into that G50. If this 5-minute can start slowing down. After that break, I can come back for that push. Okay. Get into it for the push. Follow my trade. Rule number 4. Exit rule. Profit 10-30% gain on premium. Beautiful job, guys. 40% total profit. First trade of 2026. My goodness. Way to kick it off. Way to kick it off. First shift performance by our team. Phenomenal. All right, let's highlight their hard work. 40%. 18%. Another 17%. On top of 70%. 25%. So all the team needs is some movement. All you guys need is just some movement. So the kryptonite is basically just chop. If there's no chop, and we get some sort of movement, so nice push back the upside off of that 5 hammer. Okay, once the chop subsides, and the market gives you this, and you guys are all over it. Just a pack of wolves. Tremendous job. So if you're done for the day, you're done for the week, right? And we're just getting started for the year, right? Ramp down Friday protocols apply. Ramp down Friday. Nothing new. Nothing changes. So just treat it as a regular Friday. And the one thing I will say is don't over-index for 2026. Don't make 2026 like a big thing. We're already past that point now. It's here. All right? It's here. It's just a matter of just doing. A nice little push back the upside. So if I'm looking for a structural breakdown on the 1, right, there's no... This trend line has not broken. We're using this trend line as a path to the upside. On the 5, we're seeing that reversal back push back up. So this 5-minute stretch we're seeing off of that break to the upside, reversal, 2 down, 2 up. Okay. First target is here. Make it black. Second target is here. And that gets us back into the top of that inefficiency. So now we already reversed, and now the question is, are we going to continue? So these two setups are different. This would be a continuation setup. This would be a reversal setup. Okay. The closer we get to that that 50% retrace of that gap. Remember, these are two levels we discussed. This is not just one level. This is the pre-market low along with that G50. So the question is, what kind of response do we get off this level? So first shift lows are down here. I'm still leaning toward just being a magnet type of day, guys, because although we're getting above and below that 15 on the VIX, we continuously gravitate back towards it. Now we're back below it. Okay. Now we are back below it. If this hammer on the 5 at this level, that's an A+ setup for me. Beautiful job mixing on Beyond the Money. Focus more on SPY in 2026. So if you're done for the day, put done in the chat. So if you took this break on SPY, your first runways into this territory. Okay, now you're interested as well if you're a bear, right? If you're a bear, you're seeing a run up, run up, run up, run up, run up, and finally comes into a key level on the 5. Still, the 5-minute waves are still waving, and you want to see what kind of response you get off of that level. Right, if I get another hammer back to downside, I'll take it to the downside, and the validation mark will be a continuation. Did we get to that 50 point or no? I don't think we got to the 50 point yet. We're quite a ways. Quite a ways from the 50. We're right there at that 50. Okay, we're very close to that 50% point of that entire move. Okay. If we break below that candle's low on the 1, that 5-minute candle turns into a shooter. I'll take it to the back to downside. Right. Keeping a close eye on that 5. If we can fall below these lows, we'll be there for it. Okay, see if you like continued push. Okay, take it right there. Take the puts right there. Okay, when the puts, my risk would be this candle's high. Okay, up 11. TP where you need to. I'm going to take a majority off right there. At 12. Okay, up 14. TP where you need to. Nice rejection. First trade of the year. There we go. Up 26. Take some more off right there. And you're going to take that if you did. Great job. Down to last one. Last TP 26. That'll probably be the only trade I do take. Okay, down to last runner here. If we get back above this 683.95, I'll stop out or shift this. I already took a 12 and 26 off that rejection here. Anyone else catch that? If you did, great job. 150% on IWM for Turbo. What a start. What a start to the year. See if we get that close back above that level. On this last runner. If we do, I'll close it. What a catch. That was off those lows. Done for the day. Nice and green. Good, good, good. Try to get out of this last runner here. If we close back above 683.95. If we can do that, that'd be great. On the 5, we're starting to course correct. Right? On the 5, we're on the verge of a continued push higher. We're on the verge of a continued push higher. Having a hard time getting out of this one, this last runner here. Give me 1 second. Anyone else take that? Anyone else take that? If you did, great job. It was good while it lasted. My Weeble desktop seems to be frozen here. 1 second. Where's IW? So you caught off those lows, Turbo, if you did. 150. Monster push. So quick scalp the downside off that level. Couldn't really get more follow through behind it. See if we get back above VWAP. If you took it off of these lows, you're laughing to the bank. We're back at that D50. Daily 50% retrace today. So this is leaning towards being a magnet type of day, guys. So we haven't grabbed these lows yet at 1030. Looks like we want to gravitate back towards these highs. Right back this key zone. So it looks like a magnet if we can't create that sustained separation away from that 15 on the VIX. Anyone else? Anyone else take that? If you did, great job. Either way, if you took it off of those lows, reclaim that 682.26. All right, so this rejection looks like it was just a rejection into a potential higher low. We're starting to push back the upside. We can see on the hourly, we're starting to impact that hourly candle. And all of them came into that key zone. So even that the IWM, right, look at that on IW on the hourly. Came right into our key zone. Massive wick on the hourly. Same thing applies on the Dow. Same thing applies on SPY. Same thing applies on the Qs as well. So the question now becomes, can we get back above VWAP? The question is, can we get back above VWAP on the 5 on SPY? Now it looks like Bitcoin is trying to make another push into that 90K for the second time today. Gold, right? See if you get that close below that structural break to the downside. And we're starting to see the VIX pulling back slightly now. But the main thing we want to pay attention to today, going into today, is separation. Okay, separation, sustained separation away from this level here. If we can't get that sustained separation on the 15 off the VIX, more than likely, magnet type of day is likely on SPY. Can it be an exaggerated magnet type of day? Absolutely. Okay. So what I mean by that is sometimes it looks like an expansion. Okay. Okay. So say this is the magnet. Sometimes a magnet can be like this. Just multiple. Okay. And just choppy, relatively choppy, ATR below 60. All right, but this time if the ATR is high, okay, if the ATR is a little higher and it's still a magnet day, what's going to happen is it's going to have expansive moves. Okay, like large moves, and there's still going to be a gravitation, but it's just going to be large moves. It's just going to be more exaggerated. All right, so if you look at the ATR, guys, we're moving 96 cents per 5-minute candle. So we're covering a lot of ground. We are covering a lot of ground. My Weeble here is freezing. Let me see what I can do here. 1 second. Make sure to like the video on YouTube. Make sure to subscribe. Is my screen on Google Meet frozen? Let me know if that's frozen as well. Are we having issues there? Done for the day. Beautiful job, Sanjay. First trade. Call. Yep. Double bottom. Got my target on prop firm. Beautiful job. You passed today, Gary. Beautiful job, Milton. Look at that. So now we're having a hard time at this territory here. Give me 1 second. Okay. See a nice little push. Yeah, I passed it now, just waiting for a payday. So you passed and you're waiting for a payday. Is that with what was it? A Funded Next? Or was it Funded Next or Top Step or Tradeify? So congratulations to Gary, guys. A round of applause for Gary. Great job. Apex, okay. So Apex. So now we're just chopping around this territory. Done for the day. Beautiful job, Sanjay. First 10-day need to pass, I think. Okay. Now the fifth. So some of them have different rules. You can pass in 1 day. Pass in, I think, 2 days or whatever the rules are. So what's going on is we're coming into that equilibrium. Okay, we're coming to that 50% retrace of this entire move. Remember the 50-50 setup? Okay, 50-50 setup. That can come into play. Okay, well, we're coming smack dab into that territory. Collapsing once again. Fueled off of that rejection of G50. So now if we take a look at the one that structural break is looking a little better and is running out of fuel here. So you can see bounce, bounce, bounce. I took this to here to see if I can get that nice little break. And then bounces again, and then finally starting to break below it again. All right. So for me, that might just be it. Just one trade. Good enough. Just wrap up the week. and then get ready for 2026. The next first official week of 26. Main thing is, guys, separation away from that 15 will be critical. Okay, 15 separation will be critical. Now only the 5th. Good. Anyone else passing the accounts, let us know. Keep us updated on your journey. If the demand is there for us to go back to doing that, we can obviously do it. But I'll keep it on the stream. I'll keep it on the stream. And when you're trading and streaming, it makes you more consistent. Right. The thing with the future side is you can trade everything. Right. So you can trade gold. You can trade ES and Q. Your options are unlimited. You can trade Asian session. You can trade Bitcoin. You can trade anything at any time. So if you know a lot, it might be not a good thing. Because as soon as Sydney session opens up, the orb is there. All right, let me tell you something real quick. Say if you're trading your accounts, all right, we'll probably just put it to practice. Okay, rather than just talking about it. Okay, so you have Sydney. You have Sydney. You have Asian. This is just something I just want you to think about. You have London. And then you have us, of course. All right. These are the 4 markets that trade. All right. So and that's when the market kind of closes and then waits until Sydney. So Sydney opens up first. When Sydney opens up first. Okay. When Sydney opens up first. Okay. You have the same setup, guys. On that open, you have that orb. That's the one trade you have. London opens up. So these are the major markets, okay? Sorry, this is Asia, not London. Asia opens up. Same thing. On that open, guess what, guys? You have the orb again. London opens up. Okay, London opens up. Okay? So literally one trade, just to give you an idea, one trade, how many opportunities? So you're just doing one thing. The way we teach it, so you need to watch that Shockwave 15 course. So you literally have NY, so New York. You literally have one strategy, but now look what opens up. All right, so one strategy, 1, 2, 3, 4 opportunities. What do you need to factor in? Okay, I'll tell you what you need to factor in. Here's a mess. Sydney's very tricky to trade. Sydney, think of Sydney's conditions, okay? Think of it as when we're trading SPY, the low ATR conditions that we've seen, those choppy days where we stay inside. The action is very slow. Unless there's a catalyst. The best case scenario is if it gaps up or gaps down and has a continued push. That's the best days. But most cases, Sydney's very slow. So you have to know how to navigate what to look for at that particular time. But you have the strategy. Things start picking up when we get to London. When we get to London and New York, things start waking up. So one trade you can do, of course, is the 5 or 15 minute orbs. And the next trade you can do is first shift, second shift grabs. Literally. All right, so you take the Sydney highs. Okay, so that's one. They have one is the orbs, the other is Sydney high. We come into it in Asia. We look for our price action confirmation. We break below it. Structural. Same thing we look for. continue to push the downside. So you wait, you play the manipulation in each of these shifts. So essentially, okay, this is what I used to do when I was doing the CFDs. All right, but I wasn't doing the orb. I was just playing the manipulation. So the framework of the shifts comes from here. In smart money, it's called the kill zone. The kill zone is basically the passover or the handover for when one shift is closing up and the other one is opening up. So there's an increase in that volatility, increase in the volume. So literally there, if you have enough discipline, you have four things, just two things you're looking to trade, two systems, but look how many opportunities. Okay, and as far as volume is concerned, the most amount of volume is here, between New York open and all the way into 11:30 to London close. That's where the most of the volume is here. So it leads up to here. It starts picking up. Okay, so it starts picking up and then falls off a cliff. Think of the volume in the participation groups like this. Starts picking up a little bit. Okay, during that transition period, when one shift closes, the one market closes, the other one opens, picks up a little bit more. Okay, starts coming a little lower. Volume starts to fall a little bit. Okay, and picks up again a little more. Okay, and it starts to climax in New York, continues to accelerate, and then once London closes, it starts to just come down to New York. So that's the illustration of the volume and how it works. So look how many opens there are. 1, 2, 3, 4. And every single day. But the trap is, guys, I've been there before too, okay, is trading Sydney, then you trade Asia, you trade London, then you trade New York, then you're completely burnt out. So you have to have a lot of discipline in navigating these markets because the opportunity now just opens up. It's a double-edged sword. Okay, more is not always more. Okay, nice little breakdown there. Continues to push the downside into those lows. So structural break. You can see that structural break, rejection. So for those last puts, if I just waited a little bit for that entry, could have got more out of it, but I'm okay with that scalp. Just wanted to get one under the belt. How are we doing on YouTube? Guys? Quick lesson, if okay. What side do you normally take? 10 when scalping out. Also, what do you think of 0? Is your rule based on option pricing, something like that? No, I use 0 DTEs. So 80% of the time 0 DTEs. If I'm looking at any 5-minute ideas, 1-minute entries, 0 DTEs. So on okay, so 10. So usually I want 10 contracts Monday, Friday, 20 to 30 contracts between Tuesday and Thursday. Yeah, most of the time it's 0 DTs. Sometimes if it starts chopping around and I start going over the higher time frame, you don't have to use zeros. You can use something else because if it's gonna go, it's gonna go. Okay, if it's gonna go, it's gonna go. But you can see clearly we brought this up. Our team is aware of that potential breakdown. But if it's going to go, it's going to go. So you have to just use the appropriate contracts that adjusts to your time horizon. My time horizon is a little longer. I'll take further dated. If I'm looking to take a potential move that might take a couple of days, I'll take further out. Okay, so if I see some profit that same day, 25, 30%, I'll take some off. I'll swing into the next day. But those things have to be defined prior to me entering. So a scalp can't turn into a swing. So say if I take the puts here, and it works in my favor, and I'm down to a few runners, right? It's bad practice for you to turn a certain type of trade into another type of trade if you never originally intended for that to take place. Okay? Again, guys, make sure to like the video. Make sure to subscribe. Make sure to like and subscribe. I have a couple things I got to take care of today. So we're going to run until 1 o'clock, 12:45-ish. Orb second in a row, 100%. Who's done for the day? If you're done for the day, put it down in the chat. Did have a little bit of FOMO on this move here. So this is my remedy for the FOMO. There's a little scalp. Structurally, you can see a nice little rejection. Off of what levels, guys? These rejections are not taking place off of random areas. This morning, we went over it clearly with the group on how I draw my levels. Very simple. All right, very simple. You can see, comes with that D50, retrace, reject. My attempt was at that G50. Okay, so there's a way to systematically approach this. You need to have that system. If you want to learn the basics of or the core principles of the system, make sure to sign up for the boot camp January 10th. Okay, sign up for the boot camp. We'll go over everything. Contract selection, setups. We'll emphasize more on setups this go around. And a lot of you are watching the Getting Started Day Trading course, which is very, very encouraging. By show of hands for the people in the group, anyone halfway through it yet or completed it fully, let me know. Any of my SPY strikers, anyone fully finished that course? If you did, great job. That's a 5-hour commitment. Right, so let me know if you guys finished that. What a breakdown, though. What a breakdown. If you haven't finished it, just take your time with it. Go through it. That gap closed. Thank you for the update, Elian. Thank you for the update. You finished at Milton, okay? Any thoughts? Was it valuable? Did it help you? What was your favorite sections? Done for the day. You guys are, man, you guys came to extract profits today. Beautiful job, Tyler. Not Tyler, sorry. Beautiful job, Hero. I don't know why I keep saying Tyler. Apologies. $50-50, yep. December 18th. I mean, we got the best team, guys. I mean, it blows my mind every day. All right, the type of traders that we have in our team is unbelievable. Iron sharpens iron. 3 for 3. Look at this, guys. 3 for 3 for Hero. If you haven't already, guys, continue to put your commitments in there. It's never too late, right? It doesn't have to be exactly before 2026, all right? You can put it in any time. Next gap, 100%. 40%. Turbo. I think Turbo got the biggest gain today, 150 on IW. Beautiful job. Beautiful, beautiful, beautiful. Absolutely, Alan. How many likes do we got? Let's check on the likes. We got 50 plus people joining us This thing just seems to be falling off a cliff. Let's see how far it can go. That's what we got the key levels for, guys. Okay, we got a key zone there. We violate that key zone. What's next? Weekly downside breaker. Weekly downside breaker. If we fall below there, we have a huge drop. Okay, we have this gap here all the way from December 18th. All right, December 18th. We have that massive gap awaiting us here, where it looks like we fill this gap as well. Weekly downside breaker right there. So on my end, all right, I don't have any major levels. There, of course, there's going to be pivots. There's going to be areas and zones. But according to my system, the only levels in this area are targets. Okay, weekly downside target, TOG, BOG. We have a daily downside target here. Outside of that, right, we have a daily downside target here. There's no major levels. All right. So what does that mean? That means this opens up a runway. All right. That means it opens up a runway. Massive runway here, guys. Massive runway. To play those runways, you need to have further data contracts. When we take a look at our game plan chart, this morning we talked about how this is going to be a test zone. Falls right below it. Okay, so it was testing the zone, got above it, got below it. All right, so now we couldn't catch a bit above that break. Nice little trap above there, PMH. And now we're in this bounce zone here. So what we need to do is go hammer on the 15. If we go hammer on the 15, there can be some early signs of life. If we slice right through this in the similar manner that we saw here, guys, if we slice right through this, okay, similar to what we saw on Wednesday, right, 680 is next. If we can convincingly close below 680, 56, get into 680, that opens up another area for us to drop. You can see we have this area here, zone 2. All right, so think of these zones simply as areas. All right, so for instance, if I'm looking to go short, I'm very hesitant to go short at this particular area here. All right, it's overextended from my view. All right, so it's either I'm short already from this breakdown, all right, take advantage of here, target this area, or I'm looking for a potential dead cat bounce, some sign of life. Okay, you can go long, and then when that dead cat bounce validates, which invalidates the reversal, structural breakdown, rejection of a key level. Okay, then I can say I'll take it back to downside, targeting this area in hopes of a break and a violation below these lows. So these zones, think of areas. The way I view it is I'd be hesitant to be short exactly here. I'm leaning to the upside. All right, we amended this bounce zone in the pre-market prep. We said it's going to be a test zone because we're just kind of just opening up right there. All right. And these zones work out tremendously. So now if I'm looking to go long in this zone, I just need to wait. Let the selling clear out. Need a hammer. Hammer time. Okay. I need an MC hammer. Structurally, on the 15, you want a hammer. On the 1, you want to look for reversal patterns. Can someone put in the chat some reversal patterns? What are some reversal patterns? I'm done for the day. 3 trades. Stopped out, minus 22. TP, 67%. Played 9 EMA ride in 15-minute EMA. Stopped out 1 put, 17%. Look at that. Right, so this 22% stop allowed for that 67% TP. So beautiful job, Artem. Right, and kudos to you for being dedicated, okay, to the orb, going through all the material, asking questions. sticking to it, and truly building the system. And I'm happy that you're finding your way and really getting a good grip on it. All right, so tremendous job on doing that. And 2026, again, it's going to be phenomenal because the system is there. You have the system. A lot of you have the system. Okay, it's just a matter of, right? So don't be discouraged. I'll say this. If your biggest challenge is between the ears and no longer on the chart, you're in a good place. If your biggest challenge is no longer chart related, means you have the technical prowess, you have technical understanding of all patterns, you know what your setup is. If you have that down packed and your biggest challenge is between the ears, everything related to psychology and mindset, all right, you are right there. So don't give up. Doesn't matter how many times you blew up. That's the last hurdle. Okay, and that's the biggest hurdle, the between the ears part, the psychology part, the mindset part. If you can find a way to get better at that and make slight improvements and adjustments, the technicals will always be there, guys. The technicals are the technicals. Okay, we got the best setups. High probability. Are they going to work every day? No. But there's a good chance they're going to work most of the time. But do you have the mental fortitude to play the setup after getting stopped out? When it shows up and it's valid. Or it's, hey, you know what? I'm not going to take it this time. That's all the stuff that takes place between the ears. Nice retrace, reject of that 681.71. All right? So, very important. So, great job. And it takes a lot of time and effort, guys. It takes a lot of time, effort, dedication, persistence, just like anything else. Resilience, determination. Whatever buzzword you want to use, it's going to require it. Okay, because the biggest challenge for new traders is they're combating so many things at the same time. They have to learn the technicals on the chart. They have to learn strategy. They have to learn how options work. They have to learn about the overall dynamics of the market. They have to learn about the seasonality, the different cycles. That within itself at least takes 1 year. At least takes 1 year. At least takes 250 reps because you want to see how things trade at different times. You need that experience. And then after that, you start figuring out your system. You have a good understanding of the technicals. Now the battle becomes between the ears. Yeah, and that's the toughest battle. Because it's literally you versus the market. The market is out to manipulate you, trap you, move you off your pivot. On top of that, you yourself, as traders, we're always looking to self-destruct for some reason. Right? There's deeper psychology behind it. Right? And there's elements of self-sabotage that are tied to deeper things, but it just seems like we're just fighting ourselves. Okay. And unfortunately, there's no one, fortunately and unfortunately, there's no one that can get you over the hump except yourself. Especially the internal stuff. There's no one that can get you over the hurdle on the outside. It's everything within self and your belief system. You can, and that's why our community is basically there to give you the resources. All right, the resources to help you get that profitability out of you. It's already there. It's like if someone has a belly. Okay, if someone has a belly, technically everyone has a six pack. We can all agree. All right, everyone has a six pack. All right, but some people's six pack, right, is there, but it's not showing up because it's not being refined. It's not being worked on, but it's there. Under all the stuff, it's there. Same thing with profitability, guys. It's within you already. But you have to go through all this long journey to get it out of you. Go through this process. And no one will tell you that. Okay? People will tell you, you know what they'll tell you? Take this course, you'll become profitable. There's nothing you can do. You can have the best strategy, the best tools, the coolest indicators, the subscription to Flow Algo, to Cheddar Box, whatever it is. You can study shadow market, whatever it is. Okay? Dark pool, iceberg orders. It's not going to help you. Okay, so everything that I have or I try to do is to give you the tools so you can tackle the market, you can tackle yourself alongside a bunch of other people doing the same thing. All right, there's no secret indicator, there's no secret key level. There's multiple things. If it came down to a key level, all right, everybody will be a gazillionaire. That's just one component. Why do you think I'm open with sharing strategies, sharing my key levels, sharing the way I do things? Because I know that's not it. And it requires more. Okay, it requires more. It takes hundreds of hours of observation, like I was watching G from May. I would say every day, the way this committed to the charts, I even lost track of the hours I'm watching. Yeah, so the commitment, guys, this is just one half of the commitment. So I've been doing the same thing, I would say from 19 all the way till today. I don't think, or maybe I'll be a part of a rare group of people, okay, that have been on the 1 minute time frame every day on this particular ticker. Because SPY has a chance to change your life, guys. Right? But I'm not going to say it's going to change your life. I'm going to say that the process itself will lead to that. So let's not focus on the life change. Forget about that. Forget about the life change. Forget about all the bells and whistles. Forget about it. That's unattainable if there's no process. It's just a pipe dream, which is actually more toxic. Okay, it's actually bad. Because it's something that hangs over your head. You think you're going to get it, but you're not. Because there's no process in place. So if the process is in place, if you treat it just like a business, if you treat it just like work, if you have that professional approach, just like you do at work, you document everything you're doing. You write your own white papers on your strategy. Have that systematic approach rather than falling for the trap of this being gamified. The reason why it's gamified is for you to play the game and lose the game. Okay, you're part of the game. Okay, I always say the market is salivating over your account balance every day. It's saying one day I'm going to get it all. It's salivating. Okay? Excuse me. Okay? So don't give it to the market. You will a few times. It's natural. All right. Take that as tuition. Something can come from nothing. So you're going to have to pay some sort of fee, some sort of ignorant tax. You didn't know, and they're just learning. And you'll see. You can take it as far as you want. You can take it as far as you want. And more than that, it's just like how I say we equate how price has the price discovery. This is self-discovery as well. You'll start noticing a lot of things about yourself that's going to come out on the chart. And for you to operate at your highest level, those things have to be addressed. One at a time. That's why when someone says, "Hey, you know what? You can be profitable in 30 days, 90 days, just do this system," whatever it is, it's not the truth. Even with the system I have, I can't even tell you that. Right? Because there's so many things that go into it. The technicals, the know-how being one component. But there's other things as well. All right, so nice rejection at that 682.25. Nice rejection. We're trading below that daily downside breaker. Now let me go back to some of the comments. I'm noticing some destructive behaviors in my own trading. I'm very competitive, and I sometimes allow myself to shift mentally from focusing on the process, trying to outperform myself. Larger targets, holding longer, drawdowns. Need to make some. Yeah, that's especially for people who are very competitive, ultra competitive. Some people face. What I noticed for me was I was more comfortable. For some reason, I noticed I was more comfortable in drawdown than I was in the green. And I had to correct that. It took me some time to correct that. So what I mean by that is, for some reason, right, if my position was down 40%, I was like, oh, hey, you know what? It is what it is. You have this careless or you don't care attitude, because almost like you're, hey, I'm trying this endeavor. If I lose, no big deal. But when the position is up 20%, it's almost like you don't know what to do. You get uncomfortable, okay, winning. So you have to learn how to win. Right? So maybe you hold too long, you don't hold long enough, you go through all these different things, and you gravitate back towards your comfort, which is drawdown. So that's what I discovered. So I had to go down that journey and really ask myself, why am I more comfortable? Why am I more calm when I'm in drawdown? And very uncomfortable, very on edge when I'm in green. Right? So I had to learn and put the proper protocols in place and do the repair, internal repair, and adopt a winning mindset. Not to always win, but to flip that mindset. To be uncomfortable in drawdown and to be comfortable in winning, in the wins. So I essentially flipped it. So now I'm very uncomfortable in drawdown. To combat, right, my past behavior of being comfortable in drawdown. So I'm very uncomfortable in drawdown. Don't want to spend a lot of time in drawdown, if you notice. And when the trade starts to work, I get comfortable after taking profit. So that was the big shift for me psychologically when I noticed that. And then literally what I just did was it took some time, is just flip it on its head. right? Because if I'm a technician, if I'm taking a trade, why do I have to sit in a lot of drawdown? That means I'm wrong. What kind of trade setup, right? A lot of traders excuse that for the fact of being right. Sometimes you do have to sit through drawdown, okay? Because you're letting the idea play out. As long as it's within your risk parameters. But I'm just saying overall. So for scalping, especially those 0 DTEs, I'm almost allergic to drawdown. So I have to try to avoid it because I don't want that area to turn into a comfort zone once again. And it's very easy for you to revert. All right, so I have those protocols in place. Very tight stop. If I like the idea, cut it, re-engage. All the frameworks I have for myself are based off of avoiding my own psychological traps. So you have to do that deep introspection. And it has nothing to do with the P&L. The P&L will take care of itself. Right, so you have to do that deep introspection, and everyone is facing something that's very, very similar, but is manifesting differently. All right, what helped me is just flipping the whole thing upside down. 50% IWM, beautiful job. Okay, going to rest. Have a great weekend. You too, get some rest. Hopefully you feel better. I'm starting to feel better. I think I'm on the tail end of getting rid of this cough. On Monday, I should be back to normal. Even thinking I may need to stop looking and share my DNL. Notice it triggers me, pushes harder. 100%. Right, whatever works for you guys. Again, everything is about the process. I try to make it as process oriented as possible. Feel better 100%. You're not losing. Your business requires 100. Yeah, it's a business expense. Having that mindset really helps, especially if you've had a business before. You know the things that come with a business. You're going to take losses. All right, your business should not shut down because you didn't get rid of one unit of inventory. Okay, your business should not be that close to shutting down. We drew that parallel on Friday between business contracts and business contracts and inventory. So go check that out. Wednesday's episode. That was me for a few years. Sometime wants to creep back in. Pride, thinking I'm right when the market should. Exactly. And a lot of it is ego. A lot of it is pride. Right. And if we refer to scripture, we know what pride is, right? Pride, applies right to trading. As soon as your pride starts showing up, blown account is around the corner. As soon as ego starts showing up, blown account is literally right around the corner. Right? Because the thing with ego and the thing with pride, it wants full control. It wants complete autonomy. There's no partial pride. If you let it in, it's full control. You can't operate out of semi-pride. It can't be two. Pride wants everything. And that happens, say if you're on a long winning streak. You become euphoric. Euphoria. You're almost like on a high. Pride starts creeping in. Right? Pride convinces you that you're unbeatable. You mastered the market. And now you're not doing the things you were doing before. And then, boom, you get humbled again. Right? So it's a whole process. We can spend hours. We can spend hours and hours talking about the psychology element of trading. All right, and that's why even with the wins, even with the losses, you have to go back and revert to the process. If you're green on the week, if you're red on the week, you still have to make the adjustments. Adjustments are not exclusively available only to the losers, only to losses. For some reason, we get introspective, we get philosophical, we get deep in our journal after a loss. Okay, but when we're winning, when things are good, we want no parts of it. So it has to be the same. Win, lose, or draw, we have to go back that journal. We have to make the adjustments. We have to bring ourselves back down to the middle. If we get too low, we have to lift ourselves to the middle. If you get too high, bring yourself back to the middle. I like that quote from Bill Belichick, right? So they don't, I'm not exactly, I can't recall the quote exactly word for word. I'll paraphrase it. Right, but he wouldn't accept anything in a winning game that he wouldn't accept in a losing game. Meaning, just because you won, if you played bad, it's still bad. Just because you won, don't let winning cover up your mistakes. Now, sometimes you can have a bad trading day and still be green. Right? You can if you do it for long enough, guys, you can even have a bad week. You're off, but still squeeze green. But if you're not seeing what's going on under the hood, next week that green you just had that week, it wasn't truly properly earned. You're going to give back everything next week and more because it's going to completely unravel. Pride comes for the fall. Absolute pride comes before the fall. Absolutely. 2 stops, 3 stops, 4 working. Pride nonsense in the U.S. 51st state. Even worse, I was rewarded for breaking my drawdown rule. Only reinforces exactly. So it's truly a journey, guys. Truly a journey. Calls and puts. If we can grab second shifts lows, that'd be great. Into the structural break. Make sure to like the video. Make sure to subscribe. See how many likes we got. 50 likes, we'll do the giveaway. So we're leading up to boot camp. Boot camp is a big thing. All right, boot camp is a big thing. So new shift. If you're interested in joining our community, check out this short clip that goes over all the features, and I'll see you on the other side.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the SPY Strikership Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY Striker today, and take your trading to the next level.
Okay. See, we get this break of this resistance, room all the way back into this yellow area here. Ideally, I would like for us to sweep that 680.42 first. If we take a look at what's going on across the board, let's see. Okay, let's see what's going on across the board. There's a couple names that I did like. I could have went this way. So look at this, guys. The hourly. You see the 15-minute, nice 15-minute candle that pushed the upside off that area. So that's why it's not in your best interest to be long in that territory. That's exhaustion. All right. If you're using the zones, and all those things are posted in the Discord early in the morning. Okay, let's go across the board, see what's going on. A couple of names that I did like, I had on watch. It was Pepsi for the breakdown from I keep saying last week, from a few days ago. If you recall, below 150, 145, we get that retrace reject. Pepsi starting to slide to the downside. Working out. Google for that breakout. Look what Google does. It breaks out. Let's see what it does. Once it does break out, turns to a trap. As the entire market slides, Google slides back to the downside. See if Google can at least get back above 315. That's why it's so important, if we get a breakout in pre-market, to wait a few seconds. To wait and let the dust clear. All right, especially if you're a beginner when it comes to those breakouts. As far as Palantir is concerned, can't hold that 180, slides on under it. JPM, it is making a nice move off this 321, 322 area. Okay, nice little break. So it did sell off initially. That sets us up for that nice buy back up. It's starting to bounce. See if you can catch a bid. Hold above that 322.90. Continue to push. NVIDIA, not doing much there. Double top. CMG. Want to see if CMG can break below that 36.90, 37.07. Currently treating it as support. We want to see a failed of that support to support that break of that channel. eBay's back in this territory here, right? Test zone here. Again, right now, as of now, it is resistance to prove otherwise. But if you want to look for something above it, back above it, you need to get above this territory up here, which is that 88.70. Get above 88.70. Use that 87.82 as your risk for potential reclaim of the zone for a push back into the jaws of that massive, I believe that's a gap down there. Let's see. Massive gap down. So this massive gap down is probably tied to earnings. Let's take a quick look if it's tied to earnings here. Yeah, so it's tied to earnings. Okay, this gap down is tied to earnings. Based on the earnings, eBay beat earnings, met the revenue expectations, okay, estimates. So double beat on eBay, gaps down. Now it's looking to make a recovery back at the jaws of the gap. So in this area, I'll be leaning towards a potential push into that gap fill. Therefore, I want the resistance to clear out. Meaning, even though it is leaning towards being resistance, I want that resistance to be invalidated and proven otherwise. So I need it to get above that zone, and then I'll use that entire zone as a risk. Okay, so eBay, keep a close eye on eBay for that reclaim. If you're still bearish on eBay, you have the right to. Just know where your risk is. If you're bullish, wait for that structural break above it. Okay, textbook support, textbook resistance turn support type of thinking. As far as Crocs continues to push the downside. Lift, nice little push right there. Lift off on lift. Bounce off that 1862, 1910. We can see it's kind of pushing to the upside. That has room to this area here, the resistance area. And once it does get to that territory, right, then you can make it really strong push into this potential break of that resistance. Lift, again, didn't take any of these. Meta's falling off a cliff here. I like Meta in this territory here. That territory is 636.47, 639.84. So between 636 and 640. I want to see what kind of reaction we do get there. United Health, push back the upside. United Health was inside on the day. Nice break of that inside, continues to push. Now United Health is recapturing that 330, trying to get to that 340 territory. United Health was trading in this channel for quite some time. Kind of just went sideways for a bit, and now it looks like it wants to kind of expand this channel. Right, so always adjust your channels, guys. All right, you can always adjust the channels if new levels are given. So if those lows are still intact, those prior lows are still intact, and structurally it's sound, you can adjust. So what I mean by that is the reason why I adjusted at United is because these lows did not get taken out. All right, so it's still an uptrend, not the cleanest uptrend, but structurally it's still abide and buy. This push the upside, we can see. As far as Intel, nice little push the upside, gap up and rip the upside on Intel. Whole semiconductor space is seeing a nice push. TSM 444. Okay, did come at that 450, 460, got above it, traps, slide to the downside. Now, as far as our full watch list is concerned, let's see what's moving and grooving here. As far as sectors, we'll start with the sectors. Utilities trying to get above that 43. XLV is flat. XLC is close to being down 1%. Nice little rejection out this territory there on XLC. Resistance, XLP, consumer staples. Structural breakdown brewing on XLC. We're seeing a series of lower lows, somewhat of a descending head and shoulder. If you see it, you see it. Okay, descending head and shoulder. All right, head and shoulder is not just one way, guys. There's three ways to approach it. If you see it, you see it, and keep a close eye on XLP. Okay, for that potential breakdown in XLP as we're making a series of lower lows. The head and shoulder, what is the leg of that shoulder? This is the leg. So this is that initial move up. Okay, let me fix this. Initial move up is here. All right, that's the initial move up. And we have that right shoulder, head, left shoulder, head, right shoulder formation. Right. Neckline violation. Okay, neckline break would be, all right, just another lower low. There'll be another lower low. So if you are playing that lower low, see if you can get a nice break of that and turns into a very low lower low, at least into this 76, 89, and then eventually that 76 even level and slide back at that territory. So head and shoulder brewing on XLP. Okay. So those structural highs that need to be respected for us to kind of lean towards being bearish is these ones here. As long as those are not violated, we have those highs up there as well, but these would be the most important ones there. So we'll see XLP. Keep a close eye on that for the rest of the month. XLRE, real estate, not doing much there, leaning towards support. XLY did make an ATH last week. Now starting to slide to the downside after falling back below that resistance. XLI, industrial, starting to push back the upside. SMH is the big news today. SMH to make all-time highs today. All-time highs in SMH as it comes into the resistance once again. So now does SMH have more juice left in the tank or more fuel left in the tank to make another push back above 376.34, which it did today. So the biggest thing on SMH is, of course, that 370. See if you can hold above that. But we're seeing XMH continue to push. Is it exhausted or does it have more room left the upside? XLB, not do much there. XLK Tech also making a nice push, giving back most of those gains it did see. XLE Energy making a nice push as well. And of course, XLF Financials relatively flat there. So Financials also on the verge of making a potential head and shoulder there. If you see it, you see it. If you don't, let's go over it. Okay, you can see XLF. Very early, premature, but you can do some deductive reasoning. And think of, what is it called? Wheel of Fortune. Okay. So they're basically, we have to fill in the blanks, all right? So again, let's see what does take place. We can anticipate a nice little bounce. As long as that bounce doesn't violate these highs, that's the formation of the right shoulder. If we see the weakness, once that right shoulder is formed, I want to see a nice come push into this neckline support. If neckline support fails, then the official reverse will take place on XLF, which is a financials, and we can work our way back below this prior resistance towards support, potentially into that 53 territory, 50 territory. And XLF, where do I love it? I love it down here. XLF, I love it down here. Okay, anytime it's in this territory, I'll be there for it. You can sum this up to being, hey, you know what? This is a retest. I 100% see the retest. It is a retest. It did break these resistance, bounce, bounce, bounce. But if the bounce is contained to being that right shoulder, okay, just a little bit of advanced technicals. If it's contained to this area, it doesn't mean that you can't take that bounce. Right? So if you're bullish, you want it to be getting to these highs, continue to accelerate, make another all-time high. That's your ultimate desire. But don't be blinded and not locking in profits when it's forming that right shoulder. Right? Ultimate desire, right? But practicality for that nice little bounce to TP and CV runners for the rest of the push higher. If it's contained to that territory there, okay, then that automatically makes that right shoulder. And now more pressure will be put on the bulls to pick it back up off of that support. If they fail to do that, that neckline violation leads to a reversal. Okay. Anything else? Okay, nothing much there. So that we should be up to speed. We should be up to speed now. SoFi head and shoulder. Let's take a look at SoFi. SoFi. Yep, I do see that head and shoulder. Left head, right inverse, downward compression on SoFi. SoFi is on the verge of a breakout here. First touch, second touch, third touch, fourth touch, fifth touch, over 5 touches of this resistance. Ideally, so in this case, what you're really playing is you're playing the breakout. Okay, you're playing the breakout if you're playing SoFi here. Hold above that 26.90 territory. If you're looking for that dip by 25 is it. But SoFi is on the verge of breaking out here. SoFi on the verge of breaking out, so you can hold above that 26.90 territory. Okay, SoFi on the verge. CRWV, nice bounce off that 65, nice bounce off that 70. Same thing on CRWV. Okay, AMD going, Intel going, MSTR going. So a lot of these crypto names, related to Bitcoin are starting to go. Speaking of Bitcoin, 89. So 90K is everything. 90K is everything. This is going to lift all those names. I'll keep it a close eye on Robinhood too. Right, I like Robinhood for the long term as well. I want to see if Robinhood can, what happened here? Did I delete that? Yeah, okay. So Robinhood, it's in this interesting place. You can make an argument for 115 reclaim. That won't be the best entry, but I mean, decent entry nonetheless. Structural entry for that support is here. Okay, symmetrical triangle. Of course, we know that's a bilateral pattern. We do have a nice bounce. See if you can drop into this territory and then get one more bounce off of it. As long as it stays above that 100, I'll lean towards being bullish. If it slices right through 100, continues to sell off, then we can adopt a different line of thinking. It's really hard for me to short Robinhood because it can just pop anytime to the upside, especially off of support. Don't like to short off support. So if it continues to come in, Robinhood comes into the support, that'd be great. If it holds above 315, Bitcoin makes a rip above 90K. That 315 could look appealing on Robinhood. Robinhood is not as closely tied to Bitcoin as MSTR and Coinbase, but nonetheless, there is a correlation between those two names. Okay, so pay attention to that. This nice little resistance break on Robinhood, reclaim of 115. All right, that's barring if Bitcoin breaks above that 90K. Finally, it's 6 times the charm. If not, collapse back to the downside. Okay, so that should cover all the bases. So welcome to the team, Jake, on the SAT VIP. That's available on YouTube, guys. Make sure to join that. We're going to have exclusive stuff available there, exclusive content available. There's that 15-minute options course available. All right, so we're just chopping around here. Most of you took advantage of those opportunities. If you're done for the day, be done. Last trade that I did take was here, 12%, 26%. Nice little drop to the downside. But there was some clean opportunities throughout the day. There's a couple of opportunities I was looking for initially. Both of them didn't come to fruition. I was waiting for a specific type of candle I was paying attention to, price action confirmation. Say if I was just looking to take it, okay? Say, hey, you know what? I'm just looking to take it. I like what the VIX was doing. That's what kind of determined from taking it, the fact that we're not getting those combinations and the VIX was doing the opposite of what I want to see. Okay, if I take this, guys, okay, I get stopped out. Okay, I get stopped out. By no means do I want to get wiped out. Okay, get stopped out, don't get wiped out. Okay, wiped out meaning you're wiping out profits from the week, from the month, even worst case scenario, your entire account. Okay, respect your stops. Get stopped out, don't get wiped out. There's always going to be another opportunity. And if you have these levels on your chart, you can see that rejection that took place right there. Okay? Any questions on YouTube, let me know. Any questions in the Discord, let me know. Let's get to 50 likes. We'll do the giveaway. Happy New Year. If you're just joining, guys. First-time viewers, let us know where you're joining from. Long-time viewers, take the next steps to join our community. We're at 35 likes. We're almost there. We can get 50 likes. Within by 12:30 is the threshold, guys. We'll do the giveaway, boot camp giveaway if we can get that done. All right, boot camp giveaway if we can get that done. We'll do that at 12 o'clock. We'll go over all the ways to join our community. If you have any chart requests, put in the chat. Any questions, put in the chat. I wish I recorded the video of me going over the levels from this morning in the pre-market. I went over how I draw the levels. I might have to do that again and put in the Discord. But I went over everything. So I kept a clean chart. Literally just erased the entire chart, which I rarely do, especially for my key level chart. And we went over everything step by step. Okay. So now, based off of that, guys, based off of that, let's see something real quick. Based off of that, let's see, okay? Let's see. Say, I have no other levels. I have no support resistance levels because these levels act as support and resistance, guys. Based off of the levels we did this morning, you tell me. Look at the opportunities tied to those levels. You just have to do your price action due diligence, okay? Look, nothing else. Okay. Now what do we get? We get a break of the level. Okay, when we get the break of the level, what takes place? What do we wait for when we get a break? Retest. Retrace, reject. We wait for it. Okay? In this case, this is a retrace, reject until proven otherwise. For it to be a reclaim, that's your stop out. If you take this to the downside, if you're going retrace, reject, if it reclaims, which can possibly happen, that's your stop out. That's your invalidation marker. In this case, you're right. You're very right. So I try to keep my trades, guys, as close, my entries and exits as close as possible to these levels. You can see. This is when the success rate is high. We have a key zone right here. We're coming into it, we bounce. So if you're just using these levels alone, okay, we get above that level. Okay. We get above it, then we break down. Not cherry picking. Just showing you. The opportunities, the biggest opportunities are tied, directly tied to these levels. So look at every opportunity from this morning. One opportunity, opportunity 2, opportunity 3, opportunity 4, opportunity 5. Okay, now we're just chopping around during this particular hour. Okay, now we have this level here. So this is going to be opportunity 6. Okay. So you can see the power of the levels. Okay, power of the levels. That's all the levels you need. Especially intraday. Okay. The 50-50 is indeed interesting. So when I was saying the 50-50 earlier, right? So if you're using the fibs, remember, we're using the fibs, we're using those indicators to further support what we're already seeing. That's confluence. Confluence equals more support. Confluence translates to more confidence, right? So in some way, shape, or form, the ideas are going to line up with something else. Okay, the reason why we need to see confluence is just for our between the ears to give us a little more confidence. Okay, so the 50-50, all right, so the 50% point, let me make this bold. Take this off, and make this nice and bold, okay? 50% point, okay, is here. This is the 50% range, but the 50% marker is right there. Okay, so now, look what we have here so far, guys. We have a drop, okay? We have a drop. We can all agree. We have a drop. We can all see the drop. Whenever you see a drop, you need to look for the second leg. So you need to see accumulation. Okay, we make that accumulation. Check. We have a key level. Check. We're at 50% point of the equilibrium. At the 50% point of the entire move. Check. We didn't get above it. Watch this. Okay, where's my VWAP? What if I told you VWAP was right there as well? Okay. Would you be surprised if VWAP was right there? Is VWAP malfunctioning? What's going on? So I can just get another VWAP. What's going on, VWAP? Okay. So now, how many areas of confluence? Anyone else's VWAP malfunctioning? Okay. Well, nonetheless, VWAP is working this. You can see VWAP was right above it. VWAP was at that 680. At that time was right there. We were just right at VWAP right there. Okay. So even though you can't see it, so now in this general vicinity, okay, in this area, okay, in this area, how many things are lining up? Key level, check. VWAP, check. 50% retrace, check. That's 3 already. EMAs on the 5, check. 4. Initial leg, potential accumulation for second leg lower, brewing. So now, put in the chat, if you're seeing this, what is your entry trigger? Everyone's going to have a different answer. How would you engage this? Opportunities presenting itself, how would you engage? Do you engage off the structural break of these lows? The support that we were talking about earlier? Wait for the break? Or do you want it to break below this key level that I provided, which coincides with the things we look for every day? Or do you want that initial rejection up here? Also, where is your defined risk? Is your risk candle based? Is it VWAP based? Is it range based? Or is it just fixed? Okay. I'm taking, say if you take 40 cents. 40 cents is your risk. Is it fixed? Is it dynamic? So those are the things. When opportunity presents itself, comes right into your face, how do you engage it? Okay, so we ask for the opportunities to come. We ask for opportunity to knock. All right, but we have to be prepared when it knocks on our door. Because if we don't, if we fumble, or if you fumble in this area, overthink, freeze up, fail to respond, engage it the wrong way, what this is going to translate to, guys, it's going to go into your FOMO category, because now you're going to say, oh my goodness, it was right there, it broke down, and you go down that line of thinking. So you have to be prepared to open the door when opportunity knocks. So what I was engaging here is I was engaging a little earlier to see if I get that, to see if I can get this here. Right. And the last round that was cut was down to about 13%. So I could have maybe just sat through a little bit, but I was engaging this being this being this. So I already got my piece. Okay, so very, very important, guys, to understand that. What's your thoughts on GX levels? Do you know? I don't use GX levels. A lot of traders do. Just think of it like this, guys. We draw the parallels to going to battle, going to war. All right. Say you're going to battle. Can you take 10 swords to battle? Or you can't take 10 swords. Okay? Maybe you have one shield, one sword, and a couple of daggers. Same thing with trading. Okay, the things you need on your chart are the things you depend on. Everything else is just noise. So to me, is the levels, which create the key zones. It's the price action. It's the environmental conditions. Okay, I got my sword, price action. I got my shield, my levels, environmental conditions, maybe a dagger. I'm ready for battle. Right? But if I have everything on the chart, it's hard for me to really see price itself. Right? After making the conditional assessment, if it's trending, if it's chopping, then I can apply different tools, of course. But right out the gate at 9:30, when the battle begins, I'm coming in with the same tools. I'm coming in with the same shield, sword, dagger. When I have an idea of the opponent, what kind of environment it's going to be, maybe I got to go back to base and bring back the proper tools. If it's a trend day, okay, I got the EMAs there. If it's a chop day, okay, I'll look for something else. If there's catalyst, okay, we'll play defense until this time. Right, so to answer your question, to keep it short, I don't use the GX or gamma to make the trading to make my trading decisions. Right, it's mainly levels, price action is the pillar. Okay. Let me know if that answers your question, Artem. So far for stop loss, here in my opinion, only should run right at this point. My VWAP is fine. What's it do? Ideal entry, yep. I like the channels that Hero uses, right? Because those are great invalidation markers. That's like your little lane. All right, I do like that a lot. All right, that's the same thing how I kind of see it. All right, if you're a long here, you can be long as it's holding. All right, the road is fine. You're just driving on the road, okay? And then when you start to see the road crack, you want to stop and get out of the vehicle, or else you're gonna fall in a sinkhole. Okay. Anyone else? Any other questions? You guys are asking some great questions. So do you guys have any video recommendations? Okay, for our first video of 2026, let me get some video recommendations. What would you like me to make a video on? All right, so what would you like me to make a video on for 26? Is it price action? Is it what is it? Right, to do a deep dive, maybe a 10-15 minute video. Okay, we got to get those videos on the channel. Smash the like button, guys. We have 47 people joining us. 47 people on the check-in. First stream of 2026. All right, so we're looking to do 252 of these. This is one. All right, God willing, we'll get to 252. Appreciate it, Jake. I see you in the Refill Coffee and SAT VIP. There's an exclusive chat there as well. You guys have a priority chat if you are a member on YouTube, so keep that in mind. I want to have some kind of alternative to the orb. Break strategy would be a great if we could sum up floor ceiling strategy, which can in the non-trend days. Absolutely, we'll do that. After a certain time, I can also take statistics of the orb. Right, there you go, guys. Textbook setup. What do we see here? It's a quick scalp. That's there. A lot of times. Again, guys, join the Discord if you haven't already. All right. It's at 12 o'clock. We'll go over the features. We'll go over the offer, the trial, over the boot camp. We'll look to take this to 1 o'clock. Hopefully everyone had a wonderful New Year's. Okay. New Year is still young. Hopefully everyone is on there. Stick it to the resolution, whether it's walking 10,000 steps a day, getting more in the Word, whatever it is. All right, just one day at a time. Just stack those days. Just stack those days. You know, my hack is, guys. What I like to do is I tell myself I'll quit tomorrow. Okay, when you feel like quitting, trick your brain. Or when you feel like, hey, I don't feel like doing it today, tell yourself this: we don't have to do it tomorrow, and just get it done today. And you keep saying that. When you feel like you want to stop, just say, you know what? I'm going to stop tomorrow. I'm not going to stop today. I'll do it today, but I'm going to stop tomorrow. And then keep saying that. All right, it's a mental game. And eventually, you don't stop, right? Because tomorrow never comes. As opposed to people who say, I'm going to start tomorrow. So again, flip it on its head. Okay, just doing the opposite works. Anyone else take any other trades? Let's see. Anyone print out their sheet, their worksheet? Today's day one of 252. If you did, make sure to fill it out. I wasn't really planning to trade today, but got one done. Another structural breakdown awaits us. Okay. Tied to that 681.71. On trend days, that's what you want to look for. Just mark out these. Easier said than done, but that's what you want to look for. 6 to 7 times out of 10 will work in your favor. So you just have to account for the 3 to 4 times it works against you. Make sure you don't take massive catastrophic losses. Ramp down Friday, 100%. 100%. So you can see structural breakdown, structural breakdown, structural breakdown. It's going to work until it doesn't. But when it doesn't, you don't want to get caught off guard and take a catastrophic loss. Just let it be a regular loss. Just a stop out. Most important highs to take out is this, of course, these structural highs. If we stay contained in that area, nice little retrace reject. If I were to take this, it will look like this. Okay, back those lows, about a 2 to 1. So instead of getting the puts down here, so in this area I'll get the calls. I'll get the calls here, and then my target would be here because that's second shift lows. Grab that, push back the upside. I'm being paranoid on my C50-50 everywhere. So it's just, again, it's the same thing as anything else. You want to start applying the 50-50 in the most important areas. What I mean by that is, of course, you can measure any range. You can measure any area of price. You can, from here to here, you can throw a fib. From here to here, you can throw a fib. But trying to get the most important structural areas. The reason why this was so important is because this was the first leg. So we're seeing this massive sell-off. Okay, we're seeing this nice push to the upside, breaks down, sell-off. Okay, beautiful. Now our job becomes catching the second leg. So in our pursuit of catching the second leg, we have to welcome the bounce. Okay, so if you're looking, when you see a massive breakdown like this, guys, you need to welcome the bounce. You need to say, okay, bulls, pick it back up for me. Even if you're bearish. Because those contracts, when the bulls pick it back up, those puts you're looking at, they're losing value as it goes up. So now your job becomes, okay, bulls, continue to take it, continue to take it, continue to take it until you reach a pivotal point where you can allocate, where you feel comfortable allocating your risk after defining your risk and pulling the trigger. All right, so the soundest way would be to get that structural break, price action combo, you get that technical break. You have that key level as well. Okay, and then you have the 50-50. All right, so now if you want to catch if you want to look for the third leg, because there's the second leg, you can try to do the same thing. You can say, hey, you know what? Okay, let's see what takes place. All right, so you can see 50-50 once again. We come to that territory, but this one doesn't have as much confluence as the other one. Does it make sense? So this one had way more confluence than this one. This one is just we have our key level there as well, and we have the 50-50 there. So this is pursuing this leg. So this leg gave birth to this leg, and this is basically trying to give birth to this leg. But at some point in time, right, now if you try to do this, if you say, hey, you know what, I'm going to get the third leg. Okay, so that would line up with this, and then you just get invalidated. All right, so you can use it accordingly if there's clear legs, but often the best one is break down second leg, pursue the second leg. What I mean by that is you see price going up. Okay, look, everything looks good. And then all of a sudden, boom. When you see this, especially after breaking structure, all right, can you be in position to catch this break? You can. But say you miss it. If you see this, be encouraged. Now your job becomes allowing the buyers to pick it back up. Pick it back up. And let it pick back up. Because what you're looking for is in some way, shape, or form, what you're looking for is the second leg. Okay? Second leg. It's not there yet. So you're going to encourage buying. Take the buying. Let them buy it. Okay? So you have your area marked out. Okay, you have your area marked out. You're waiting. You have key levels that coincide with the area. Okay, so you have a couple, let's say you have a key level in that area. You're trading below the VWAP. Come back and test the VWAP. And then now, as price is correcting, you're welcoming it. You are waiting right here. After you define your risk, you're waiting right here in pursuit of that second leg. And then now, you're starting to see a nice little dead cat bounce. Comes into that territory. And structurally, what does it do? You need that break. This is where entry model comes in. Everyone has a different entry model. Okay, but ideally you want to see that break of that leg, of that accumulation, and then second leg comes in. So this first leg to second leg accumulation breakdown is the best one. It's often the one that has the biggest move to the downside. Third leg, sometimes it can be bigger, but oftentimes it starts getting smaller and smaller and smaller. So where can we exist? If I'm a reversal trader, guess where I'm getting activated here? I'm getting activated going against the reversal, going against the trend based on what I'm seeing here, right? And remember, when you're reversal trading, you're catching a trade in hopes of a dead cat bounce leading to a recovery. But even if it plays out as a dead cat bounce, you still want to be in position where you've locked in profits. So in this case, if I'm a bull, I'm looking to get involved here into this territory. By the time it comes to that territory, there's a little advanced thinking. Okay, I'm starting to scale out. But this is for advanced trading. But for the ones who want to go with the this is what you want to wait for. Be encouraged. If you see a massive drop, be encouraged. 6 to 7 times out of 10, there's going to be a dead cat bounce. And if you use this framework similar to this, the 50-50, if you use key level in that territory, on top of that price action, structural break, okay, and a lot of confluence, this is A+++. Does it mean it's 100%? No, if it means if these things line up, there's possibly a potential 70% chance, 65 to 70% chance that it works in your favor. All right, and that's very high. 65 to 70% is high, guys. Okay. I can say it's 80, 90, 95%. Okay. But it's better to underestimate. Okay, so worst case scenario, 6 to 70. So structurally the same thing. So in this case, say if I take this trade, first of all, there's no price action entry. But if I just took it at face value, I'll just get stopped out. If I use entry model with this level, then this would be no trade. Right? What would be the cue? What would be the cue for this trade would be, comes into this territory price action a combo, and then break this support, similar to what took place there. All right, but if I just took it blindly, even if I took it blindly, doesn't mean that my risk is going to be all the, no, this is it. I'm wrong. We move along. Okay, you have to move along, or you're going to sing the sad song. All right, and literally, guys. Some of these, sometimes trading gets so frustrating. It can have an grown adult man cry. Right, dry tears. All right, just cry on the inside. So you don't want to sing that sad song. All right, so if you're wrong, move along. Let me know if that answers your question. Yes, I trade based on price action. But trend line, liquidity, well, I always breaks down. I'd use trend lines as well. It's a combination of things. Guys. I did see your comment. Barca, I did see your comment. So on Monday, we're going to get a new weekly candle. Oh, I trade based on SMC. Okay, yeah, smart money concepts. I do incorporate some principles from SMC as well. I think the bot is doing that because you're all caps. Okay, so SMC, as far as SMC, liquidity, things like that, inefficiencies, I do incorporate that as well from time to time. Right. The problem with these different strategies, guys, is each of these strategies are like a camp. All right. They're turning into little camps. Okay. So you have the SMC camp here. You have the conventional retail camp here. EMAs, bull flags, bear flags. You have the strat camp, people who use a strat here. Okay. All right. You have these different camps. And you have the people who just use price action, just purely price action here. You have people who swear by bookmap and other advanced things here. All right, so you have a bunch of these camps. Okay, and what I'll tell you guys is, because I've been part of multiple of these camps, the thing about these camps is they are in the business. What they want to do is, my way is more right than this camp. They play that game. My way is more right than this camp. My way is more right than this camp. My way is more right than this camp. What you need to know, it doesn't matter which is which. All right. So what I did is the core principles of everything. I funneled, siphoned, extracted, call it what you want, the core principles of everything. Okay, the things that work. Okay, and to SAT. So there's elements. If you come from one of those camps, there's elements of everything inside there. All right, because for instance, some of the smart money folks, they think they're above. Not everybody, okay. I'm not trying to generalize, but when I was in that camp, they think they're above EMAs. Because you're playing the game, they're playing a lot of the intellectual stuff, especially the people who swear by certain strategies. They play the intellectual game trying to solve a different problem. All right. What we're doing, guys, is we are trying to use these different strategies to put more money in our pocket. That's it. Okay. Some of these other camps, what they're playing the game of the intellectual game. Where's the algo going to be? This is this. This is that. This is this. Look at this. I predicted this. I did this. I did. Right? But at the end of the day, it doesn't mean anything. So you need to extract. So that's what I did. I extracted everything from everything. I extracted the most important things from everything. So elements of the strat, elements of SMC, elements of smart money, elements of ICT, elements of conventional retail. Everything. But if you notice, I'm not doing everything at the same time. I'm only extracting the most important things and knowing when to apply those things. Okay. Recovered from the big red today. Net 0.9. Wow. Beautiful job. Overnight call from Friday didn't work out. Beautiful recovery. All right. So If you stop using all caps, then I can read your message. The bot keeps taking it out. Yes, I know ICT. So the 2022, 2023 model. Order blocks, inefficiencies, PD arrays, Judas swing, all that stuff. I already know all that. All right, so I've saved you the time. You don't have to go through all those rabbit holes, guys. If I'm going to say anything, just don't be beholden to one camp. Extract and build your way. All right, in some of these camps, they turn into a cult, to be honest, okay? So they turn into a cult, and they're more focused on the individual than actually trading. So I try to put my strategy, my system before even myself. All right, so the focal point is not necessarily me. Okay, 12:30 or end here. Already okay. I'm done for today. Earlier, ready for some mental trades, or I'm not done mental trading. See y'all on Monday. Absolutely. If you guys are wrapping up the week, I know it's been a little bit of a weird week. A break in the middle, a new year in the middle. Excuse me. Have a great weekend. Stay safe. Again, review. Okay, review. Go over the things you did this week, things you did all month. If you have time, do some introspection. Make the adjustments. All right, one adjustment you're looking to make. So on the 5, okay, still kind of holding. Okay, still holding there. If we hold yesterday's lows, yeah, that's 680, 171. See if we can hold those lows. That'd be good. So now we're bearish on the day. We're directional to the downside. Back-to-back days of selling. Who is primarily led by the semiconductors. Right out the gate, semiconductors did lose some of that strength. They're starting to fade, and now we're starting to kind of just pull back slightly. So this is the action so far with nothing on the chart, just a naked chart. So you can see, what do we see, guys? You can see a low. What do we see here? A lower low. What do we see here? Lower low. What do we see here? Lower low. Okay? So are each of the lower lows a little less lower in comparison to the prior low? Yes. Now, what do we see here as well? We got a high. What do we see here? We got a lower high. What do we see here? We got a lower high. What do we see here? We're trying to make equal highs. Okay? So now we're trying to shift this entire downtrend. There's a couple of ways we can do it. Okay, one way is go horizontal for some time. Okay? Just accumulate for a little bit. Okay, so have some sort of accumulation. Okay, and eventually break out of that resistance to the upside. All right, that's one way. Another way is we just immediately make that high, and we continue to use this as our push to the upside and climb that little support wall. Okay, nice little support, bounce out that support into it. So do we just take this little path? The bulls just take this path, gradual grind higher, relatively respecting the support, Or do we hit a wall here and start chopping around? Because we can't just take this path. It can just be a slow grind higher. All right. If that slow grind higher leads us to shifting these highs, we got our higher high. Now the $1 million question becomes, where's that higher low? Okay. So the bulls are trying to use what to take that out? One of our textbook favorite setups. Shift low grabs. That's the best entry right there into the calls. Okay. Great. Can you please teach me about ICT? If you want to go over those concepts, if you're in detail, just book a coaching call. All right. If you want me to go over any concept in detail, book a coaching call and we can get that done. But it's hard for me to just start teaching everything now. But if you want that one-on-one time, we can make that happen. Okay. So in this case, if I took the puts here, all right, just based on that level, with no price action confirmation, structural breakdown, stopped out. So one trade today, guys, to the downside, to the puts. Plenty of opportunities. We're trying to shift these highs structurally. We grab these lows, ideal entry, SAT entry there. Would be great. I was thinking we use 682 to 683-ish and possibly reject 683-ish. Possible. Let's take a look at that game plan chart. Game plan chart. Let's go back to the game plan chart. Look who's waking up. Robinhood's starting to wake up. Bitcoin is above 90K. Bitcoin is above 90K. All right. Bitcoin is above 90K. See if you can hold. This is the sixth attempt. In that case, hold above 115 on Robinhood. If today was Wednesday, it would be perfect. So if you're opening up any positions based on any moves you're seeing, right, you have the weekend. And Bitcoin does like to make moves on the weekend. Okay, so we'll get to Bitcoin real quick. But Robinhood's starting to fuel up. All the names related to Bitcoin starting to fuel up. Coinbase, MSTR. What else is related to CRCL? What else is related to Bitcoin? There's a few other ones. I'm drawing a blank here. Anyway, SPY. You guys get the point. Okay. Where are we bouncing off of? Okay, the bounce zone. So this bounce zone was provided this morning, guys. 15-minute combo. You wait. Pull the trigger for the data cons. You sit back, let it cook. You put the turkey in the oven. Give it some time to cook. All right, give it some time to cook. Okay, so that zone was provided in the pre-market game plan. So look exactly what took place. Even if you don't take it, just continue to study the zones. Study the zones, see what kind of interaction, and you will catch it. Okay, we're going to speak into existence. You're going to catch one of these. Multiple of them, actually. All right, systematically, and not out of desperation. Yeah, the worksheet is published, Fido. Yeah, the cold, there's something going on. It was horrible. So, thankfully, thank God everyone is good. In my household, I just have this lingering cough that just decides to come at nighttime and in the morning. The worksheet is available, guys. The worksheet is available. Trading resources here. Okay, so under trading tools, go to the trading journal tab. We have of course, the Google Sheets journal, and we have this as well. Okay, so the way it breaks down is when you fill this out in the pre-market, this is intraday activity, post-trade activity. Okay, so, and then of course you clock out as well. Okay, you clock out as well. All right. That's available there. It's available to download. Yep, nice heat map there. I like this heat map. Is this on that's not on TradingView. Is this on TOS? Hero? That heat map? Okay. Okay. So we grab those highs. We got our higher high. Is this push lower in pursuit of a higher low, or is it a complete collapse? Excuse me. Okay. Again, guys, make sure to go to smartactiontrade.com. I was going to go over around 12 o'clock. Smartactiontrade.com to join our community. The Christmas bundle, all that is gone, of course. So again, the best way to join our community, free community available, access all the tools. If you want access to our monthly, 15 spots available for the month of January. Once that fills up, January will be full. Use the code TRIAL30 to trial all of our tools. All right, so you have the stream available to you for free on YouTube. Hang out there for a little bit of time. When you're ready to take the next step, take the trial, access the resources to level up trading. And then when you do decide, commit, you take the yearly or you take $50 a month. Price increase is coming. I'm trying to keep it as low as possible. But again, guys, if you look at the environment, the amount of value you get, right, this is tremendous steal, absolute steal. But everyone on YouTube should be or has to be, or I highly recommend being in the free tier Discord absolutely for free. Continue to ask questions there. Let's build a community there. And then naturally transition to the monthly and eventually to the yearly. If you want to jump to the yearly right away, completely up to you. You get 12 months of access, boot camp, January 10th, and a private coaching call with me. We can discuss strategy. We can discuss anything you want to discuss as it pertains to trading, strategy, mindset, technicals, fundamentals, whatever it is, okay? So we can discuss that, and whole hour dedicated to going over the things you need and to serve and meet your needs as far as trading is concerned. So make sure to do that, join. When you do join, you get access to all these resources, right? Live day trading with screen share, pre-market prep stream, pre-market game plan sent to you every single day at 7:30, between 7:30 and 8 o'clock, 3 to 5 hours of live trading and training. So this is not just me trading and say buy here, buy there. We're actually going through the step together. High win rate ideas, SPY trading floor chat. We got the best chat hands down. Swing trade, long-term ideas whenever they're available. These are not going to be available every single day. All right, so we are with the swing trades. We want to have a high strike rate. We want to have a high strike rate so we can't trade every single thing. Automated technicals, access to the full watch list. My strategy, you get options, getting started options trading course, a 6-hour course. You can go through it with timestamps. That's available. My ebook, Shockwave 15 course. Everything you need is available in here. The primary purpose is to get you to trade SPY for 1 hour, for one ticker, 1 hour for one consistent result. That's my goal, to give you the tools and resources for you to be consistently profitable week over week. And I truly believe that it can be done systematically. Okay, so make sure to take advantage of that and join. Use the code TRIAL if you want to take advantage of the trial. For the course, of course, boot camp's coming up January 10th next week. So next week this time, because next week Saturday, about a week and some change from now, we will be doing our boot camp. Okay, so getting started day trading boot camp. Sign up. If you sign up for the yearly, you have access to this, of course. We have a couple of giveaway winners. Any alumni, we have some people that signed up as well for the boot camp. I look forward to work with everyone. But this is going to really, really bring you up to speed for 26. If you have no clue or you have very minimal understanding of the technicals and having that right mindset to conquer 26, okay, you need to take this course. It's not pre-recorded, it's live. So we cover some modules, Q&A. So you can ask questions, right? Bring your questions, bring everything you need. All right, so we have that 5-hour session, guys, dedicated to covering this material and getting your questions answered. Okay, 5 hours. That's a lot of time. All right, so I put a lot of time and effort into this. I'm giving you the time. You're giving me your time as well. So it's a fair exchange. So for you to make the most out of this, you have to prepare with questions. Come with a notebook, take those notes, and of course you get the recording. And of course we're going to cover a lot of stuff here. So platform, tools, resources, market structure, trend, support, resistance, chart patterns, candlesticks, indicators, 3A plus setups. We'll do a little more of a deeper dive in the setups in this one. Navigating the options chains, call puts. Okay, so this is a great way to get to ramp up and get started with 2026. If you're on the self-paced course, this is available. But if you join our Discord, you get access to this as well. All right, so again, make sure to join wherever you are. Get in where you fit in, take advantage, smartactiontrade.com. The link is pinned to the chat to take advantage of the yearly bundle. You can take advantage of that. All right, so you guys have any questions, let me know. If you're a first-time viewer, the best thing you can do is like, subscribe, and come back tomorrow. Okay? So 3 to 5 episodes, that's usually how long it takes for people to join. If you've been tuning in for more than 3 to 5 episodes, again, if you want to give yourself the best chance of having the delay-free, ad-free, and access to all of our resources, all right, level up, take advantage of the trial, and I look forward to working with you on the other side. And how do you read this? TOS has some great tools that I use. Oh, that one is TOS. Just use it to observe what areas of the market are hot or not. Yeah, I love that heat map. I have this one right here, this indicator up here. You guys see it? All right, it gives me an overall view of what I'm seeing. All right, so right now what has the strength is SMH, semiconductors, XLI, XLE, XLP, XLV. So healthcare, consumer staples, energy, industrials, semiconductors, and tech is starting to fade. Financials, flat, communications, red, XLY taking the biggest hit, as well as the mags. As far as Tesla, look at Tesla, guys. So does anyone know why Tesla dropped? Does anyone know why Tesla dropped? We went over it. Of course, our Discord members, we went over it. All right, Tesla dropped. All right, Q4 earnings, not the earnings, but the vehicle. Their numbers, deliveries. So the delivery number on Tesla is critical. All right, we can see Tesla comes into 400, rejects out 400. It's at 441. So 460, sorry. 460 to where it is now, that's about a 20-point drop. All right, so this morning, there's not a lot of individual names to pay attention to. But this morning, you know what the catalyst was? Tesla delivery numbers. Okay, so that was part of the game plan. If you look at the economic calendar, there's nothing there. So you can see key watch for today given to our members. All right, Tesla, NIO, XPEV, Rivian, Li Auto, all these electric companies. Okay, along with GM, along with Ford, along with TM, which is Toyota Motors, they're all reporting their quarterly sales numbers. All right, and for Tesla to go parabolic, had to get above 500K. All right, so I provided this to the team. All right, and we talked about so the 2024, the total sales, total deliveries 1.7. So 2023 were 1.8. 2024 1.7. Okay, 2025 in total, I believe we're below 2024's numbers. Let me pull up the delivery numbers real quick. So Tesla, okay. Okay, let's see. Yeah, so not good for Tesla. Okay, so look. So total, okay, deliveries 1.6. So that means we fell below. 2023 we had 1.8, 24 1.7. close to 1.8, 25, 1.6. Okay, 25, 1.6. So now Tesla, this is, look what it says here, guys, on the key trend. 2024 delivery 1.7 vehicles marked the first annual decline in 12 years. So now Tesla, on an annual basis, this is the first time it has back-to-back declines on the yearly deliveries. So it hadn't had a decline since in 12 years, and now had the first one in 2024, back-to-back years on Tesla. So Tesla, it's going to be under pressure. If you're a bull, we can see Tesla. We talked about it last week, structural breakdown there. Right. So oftentimes when there's a catalyst like that, right, more than likely the technicals already present an opportunity. Right. So if you're bullish on Tesla, you just want to look for some sort of support for it to drop into. If you're bearish, right, if you're short in Tesla, you're loving this. Tesla already made all-time highs. Okay. Tesla already made those all-time highs. Okay. So now we can see Tesla's down about 10% from ATH. Tesla comes into this area. I like Tesla in that area. Okay. You don't need differential equation to determine that this is support. Okay. Between 390 and 380 territory. All right. That's why Tesla's dropping. Can the Tesla numbers impact the entire market? Possibly. Because it's not only Tesla who's reporting the vehicle sales. It's all the major players. So can those numbers provide some insight on the fact that there's not as much purchases for vehicles from the consumer standpoint? Absolutely. Can that impact the entire market? Absolutely. I actually like the darker version here. Okay. So that's the catalyst for today. Tesla. All right, Tesla. Not performing up to speed, guys. This is not looking good. All right, do your due diligence. If you like Tesla fundamentally, this is not, already made an all-time high. This is down 10%. No big deal. But this is concerning for Tesla. I'm not going to go as far as to say Tesla's on the clock. Right? So they need to quickly okay, get those autonomous robots going. All right. Autonomous robots. A lot of things have to take place there, okay? But Tesla's not going anywhere anytime soon. But that's a big miss. So now, of course, analysts are going to run with it. Articles are going to be written. All right. And we'll see what does take place in Tesla. We'll see if it shakes back. I already gave you the level for Tesla, where it's a great idea. Right, discounted, so let it drop off, fall off a cliff. If you caught it this morning, if you do trade Tesla, when Tesla goes, it goes. All right, when Tesla goes, it goes. Elon's been distracted with politics. He needs to pick it up. The whole new compensation package. He will be under pressure to perform. 100%. Yeah, it's just, I mean, the guys, you have SpaceX, you have Neuralink, you have Tesla, you have Solar City, you have Boring Company, you have, what else am I missing? Starlink. Now politics. In politics, out of politics. All right, so a very interesting individual. Yeah, that $1 trillion package is there. So they're trying to really incentivize him to get Tesla, those robots on the streets. So the incentive package, guys, is 1 million robots on the street. Go back and watch iRobot. All right, predictive programming. My verdict for Elon is still out there. I'm not sure. I'm not sure what to make. Do I respect what he's done? Absolutely. All right. But as far as Everything else, not sure. Robo, yeah, that's the thing. The RoboCop, that's man, it's not looking good, guys. Surveillance state, drones. Yeah, it's not. I don't know. We'll see. The good thing is, Jesus got us 100%. 100%. I mean, it's all written anyways, okay? So it's no surprise. Right? So the good thing is, as long as there's internet, as long as we can click these buttons, we'll be good to go. But everything else is going to change. Okay, AI is here. It's not a bubble. Okay, there's legitimate spending behind it. There's going to be mass layoffs. All right, that's coming. It's not to scare you. It's not to say that these things are going to take place, happen to you. It's not to wish bad things upon you, but it's to tell you that things are going to change. All right, so you have to position yourself to learn the technology, be able to use the tool, or pivot into something else. All right, pivot into something else. Okay, pivot into something else. Okay, nice little drop there. Somewhat of a head and shoulders, slide to the downside. See how many likes we got, and we'll wrap up the stream soon. Took the 680 put, scalp, gained more profit, achieved my target, 1% done for the day. Beautiful job. Beautiful, beautiful, beautiful job, guys. Yeah, so Tesla's interesting. Tesla's interesting. $1 trillion pay package. Our brain can't comprehend trillion. All right, I think we did the exercise when we equated did the difference between million, billion, and trillion from time on a time scale, and the numbers are ridiculous. We did that exercise. Okay, so think of it like this. So 1 million seconds, all right, is 11.6 days. 1 billion seconds, okay, is 31.7 years. 1 trillion seconds is 31,709 years. So the difference between billion and trillion is unfathomable. So 1 million seconds is 11 days. 1 billion seconds, 31 years, close to 32 years. 1 trillion seconds, 31,000 years. So between 30 years and 31,000 years, that's the difference. Just to give you some perspective. Just to give you some perspective. Right, so he's about to go from billion to trillion. So what that means, think of it like this, guys. Okay, think of it like this. And of course, this is not $1 trillion cash. Okay, this is valuation and net worth, not cash, not liquid. Okay, but if you were to liquidate everything and sell it at the very high, you can achieve that. And no longer be part of a Tesla, no longer be part of Tesla at all, completely divest out of Tesla, step down as CEO, and liquidate. If he achieves that goal, it can take place. Which is it's not an easy goal. So 1 million autonomous robots walking around. Beautiful job. Yeah, it's mind-blowing thesis. Started my new Bible reading plan yesterday, whole Bible in a year. Not too late for anyone to start. Hey, I love using the U version. Thank you, will too. You can study God's Word, read, watch devotionals, pray with friends. Absolutely, I'll take that. What I always do is I always go back to the gospel. I just read that over and over and over again, and there's so many things that I learn. And I do have to do a better job of going to some of the Old Testament and working my way through it. Thank you for sharing, Hero. And let me know. Let me know how it goes. I do have the app. Anyone else in a position? Anyone else in a position? Let me know. New car registration in Italy rose 85% year over year in December, but the U.S. electric vehicle market posted overall 18% drop in 2025. Data from Italy Transport Ministry showed on Friday. Thank you for the update. EU sales drop as well. Okay. Yeah, so that's the first piece of data that we got. So if we kind of look forward to next week and the rest of the month, let's see what we got ahead of us. Let's see what we got ahead of us here. Let's go orange folder, red folder. On Monday, ISM. We kick things off with ISM. We get right into ADP. We get right into JOLTS, unemployment, consumer sentiment, and then next week, so second week of January, we got CPI, PPI, unemployment claims, and we have GDP, and end of the month, so we end the month on PMI, and then we have FOMC on January. So we have FOMC minutes this at the very end of the month, guys. FOMC, we have a jam-packed month. We have a jam-packed month, okay? All right, jam-packed month, red folder catalyst right out the gate next week. The only days we don't have red folder, orange folder catalyst are Tuesday, January 6th, Friday, January 16th. And that's it. So every day outside of those 2 days, we have red folder, orange folder catalyst. So volatility will be here. Okay, so you're going to have to know how to navigate through these conditions. For the folks that have been with me for some time, this is nothing new. We've seen it already multiple times. We know what protocols to follow during these times. If you don't know how to navigate, red folder catalyst equals no trade. If you see red on the day, it means don't trade. If you don't know how to navigate, there's going to be an increase in the volatility. All right, so make sure that you're in position to take advantage of the volatility and not fall victim to the volatility. Okay? So we want volatility to a certain extent. All right, that's where we actually thrive. When there's no volatility at all, that's when things get very choppy and you start over trading, getting frustrated, impatient. When volatility is high, if you're right, you can be very, very right. If you're wrong and it's not capped, you can be very wrong. So you got to be very, very right and just wrong. Those are the two. Those are the two options there. All right. So make sure to like the video. Make sure to subscribe. Do we have 50 likes? If we do, we'll do the giveaway. It's 1 o'clock. We're at 39 likes. Let's get 40 likes. Let's at least do one giveaway of an ebook at least to get you guys up to speed on how I draw the levels. The levels, how I draw my levels. I redrew the levels this morning. All of that is broken down in my book. Okay, if you're in the Discord, you have access to the book. So this is broken down. Okay, this breaks everything down, how I draw the levels, what principles I extracted from all the other strategies, all covered in 21 pages. Liquidity, inefficiencies, identifying higher probability setups, and I reveal a 10-minute strategy setup in this book as well. So make sure to grab that. If you're in the Discord, you already have that. Okay, so just review it. But that's what that covers that. Okay, so I'll be giving that away. If we can get 40 likes in the next 5 minutes, we'll do the giveaway. All right, 40 likes. I do appreciate the support, guys. 40 likes. And if you're still with me in the chat, let me put one thing in the chat that you're looking to improve. One thing you're looking to improve going into the week. I know it's been a short week. One thing you're looking to clean up. For me, it's being more present. All right, there's a couple of setups this week. I kind of been absent-minded slightly and missed those setups, but still able to find something else. But I really want to be in tune with the market to really got to be there for this. All right, the big move. We're going to catch the move, but if we're a part of the big move, that's just a matter of just being more present. So I'll try to be a little more present, a little less distracted, to capitalize off those big moves. All right, so putting us in position to take advantage of that. So always look for there's something to improve, guys. It doesn't matter. There's something to improve. If you're not looking for something to improve and you're green on the week, red is around the corner. You have to stay sharp. You have to stay proactive. Okay, constantly look for those things to improve, okay? Did I say 40 likes or 45 likes? We're at 40. See if we can get 45. We'll do the giveaway. Let me fire up the wheel, the infamous wheel. If you're joining us on Free Trade Friday, hope you're enjoying this content. I do see your message, Milton. So again, please send me a request on Discord. There's a lot of scammers trying to message you guys. It's not me. Okay, send me a direct link. Okay, so put your names in the chat. We'll do the giveaway. Folks, in the Discord, if you put your name in the chat, you get access to the boot camp. Since we didn't hit our threshold, I'll do the ebook giveaway for YouTube. All right, it's just one trade today. Wasn't really looking to take any trades at all, but opportunity came up, took advantage. Okay, so put your names in the chat. We have until 1:30, and then we'll do the draw. So we have Gar, if I'm pronouncing that right. You have until we'll do 1:15. Okay, 1:15. You have until then, and then we'll do the draw at 1:30, and then wrap it up. Okay. Jake. Absolutely. So if you're on the yearly plan, you already have access to the boot camp. So there's nothing I can send out. If you're joining us and you're part of the free tier Discord, You can also add your name there. Okay, you can also add your name there if you want. Yeah, and continue to put your names in the chat. Giveaway, giveaway, giveaway. Overtraded today. Overtraded today, but because of stops in the game, I'm still in the game. I like that, okay? So good job on having those stops to at least still be in the game. But we just have to dial back on those trades. Thank you for sharing, Milton, as always. So you did do that. You did do that right. The stops, they're there just to protect us from ourselves. And thank you for sharing. What would you say is maybe the entries that kind of force you to overtrade, or maybe a couple of missed moves? Or what would you think is fueling the overtrading? Or maybe do you feel like you're one step behind? Sometimes I feel that as well. One step behind. Okay, we're starting to push back the downside. Nice break, retrace, reject. You see these setups so many times. Keep putting your names in the chat. We're at 4 people, so we have a 1 in 4 chance, 25% chance of winning. 25% chance of winning. That's a very high chance. Kevin, you did purchase the yearly, upgrade to the yearly, so you automatically have access to the boot camp. All right, but I can't put your name in there if you'd like, but you have access to the boot camp already on your recent upgrade. Try to anticipate reversal. Yeah, reversal trading is very. The thing with the reversal trades, once you catch it a few times, it becomes very stimulating. Okay, it's like because you're kind of going against the market, you're seeing those big gains, and then you try to repeat the performance. Group of young adult investors from Detroit, youth alumni, rung the first opening bell on the NASDAQ for 2026. The leader of the group, who is a friend of mine, has worked tirelessly for 30 years pouring into our young people, and I'm proud of them all. There should be a video of them floating around. They are the future, and we need to reach back whenever and however we can. This is my favorite ball. Absolutely. Yeah, pouring into the next generation is absolutely key. And I think that's what gets lost in our in the West. Okay, so in the West, what happens is when you get old, you essentially get discarded. In Eastern cultures, when you get old, right, the fact that you're old, you're an asset to the village, you're an asset to the community because of the wisdom. So you have the highest ranking status in society as an elder. It's the opposite here. Right? So there's a lot of disconnection from the older generation and the newest generation because there's no bridge for that information to be transferred. Therefore, the same mistakes happen over and over and over again because no one wants to listen to the elders. They already been through it. Right? I think it's on both. It's a twofold problem. It's not only the young people; it's also the old people as well, or the older people as well. Because sometimes they just want to talk and they don't want to listen. So it's the healthy balance. But absolutely, that's an amazing charitable cause, Lynn. And the more people that can be tied to the market, guys, the better. I know it's gamified. I know there's people that lose, but what else are you going to tie anything to beat inflation? There's nothing else. There's nothing else. What else are you going to do? Okay, how else can you invest? Outside of the financial markets that you can get started in. You can say, hey, you can invest in real estate. That's true. But you're going to have a pretty decent amount of capital to invest in real estate. So the barrier to entry is higher. Oh, you can say invest in startups, okay? Invest in VCs. Get into VC. There's a huge barrier of entry that's not open to everyone. This is the best shot for everyday people. This is it. Price my stuff. 100%. After it knocks it, it keeps going the other way. It reverses back in. Right, so the elders have a lot of information. Right here, when someone is old, we just basically just kick them out. Right, put them in a senior home, and that's it. So all that information, all that wisdom that's packed in that individual, just stays contained within that individual. So we have to somehow, some way bridge that relationship and mend the relationship on both sides between the generations. It's not an easy thing to do. There's nuance to it. But that's where a lot of our problems start. Stock market is way more liquid than absolutely. All right, so yeah, try buying a property today and selling it the next day. Right. There's too many people in between. Stock market, you can be in a position one day, you can be fully liquid the next day. Right, 100%. That's why it's the best vehicle in my opinion. Okay. Any more giveaway contestants? Let me know. So far, we got 4 or 5 people in there. We hit our threshold of 40 likes. All right. So you have a 40%, 25% chance of winning. Indian culture is like that. Yeah, a lot of the Eastern cultures, what they do is when someone gets old, they give them a higher status and they live with the children or with the family. So the dynamic is a little different. The majority of people miss out on the stock market because they don't understand it. Right? And there's a lot of stereotypes of the stock market, right? A lot of people just label it as gambling. Right? So the stigma already exists that all the stock market's gambling. And people can only recall the times when the stock market crashed. So they think it's gambling and they think it's going to crash. All right, but when they commit themselves to learning how it works, what it's tied to, what fuels it, what drives it, then you'll have a better idea. Okay. The stop, yeah. They should it should be taught in school. They teach it in some schools, private schools. Okay, we're just chopping around here inside on this current shift. We took out third shift highs, we took out third shift lows. You can see we grabbed those highs, grabbed those lows, and we're just jammed between that range, trading below Wednesday's lows, 681.71. So we go back to our chart here. Remember what we talked about here? Okay, so far we talked about there's two ways we can get out of here. Two ways. Remember the two ways? One is use this support as our way out of here. And the other way is we're going to come into this accumulation phase. We're going to chop around for some time. And then from that point on, either break out or break down when the chop is done. So in this scenario, the brick wall trampoline, right, is the favorable approach. Let support be support, let resistance be resistance until proven otherwise. You can see we took that path, came with that here, made that higher high. Just break down. As we break down, we come into here. We haven't taken out those lower lows yet, but essentially we're making those lows. So now you can start drawing out some relative support area and playing the brick wall trampoline type of scenario. So this being the trampoline, anytime price comes into it, it bounces. You take the calls. Anytime price comes in this territory, rejects, you take the puts. Okay, so now the scenario, the conditions have changed. We're not expanding. Okay, so in this type of environment, we have to look for different things, right? How do we know that we're not expanding? What is a key marker that we're not expanding or we're not trending? Okay, what kind of highs and lows are we making? Are we relatively making equal highs and equal lows and moving horizontal? Or are we going north or south, making higher highs, higher lows, lower lows, lower highs? All right, we're going horizontally. So in this case, you wait for that price to come to that territory, that support zone, get that bounce, downward compression, see if you get into that 681, 69 territory. That'd be the first target, and into this resistance. So until proven otherwise, we're going to abide by the rules of trampoline brick wall in this scenario, because this no longer is taking place. So in this case, okay, if we break out, we're looking for that higher high. Okay, we get a higher high. It doesn't have to take out that high. It just needs to be higher than this high. And then we start resuming. We got a low. Just think of it as stairs. Okay, we got a high, so on and so forth. In that same case, if we structurally break below here, we get that low, we get that lower low, then we start moving back to the downside. Okay, so those are the things, those are the rules of engagement. All right, so we look for the lower low, lower high. Once this has been proven otherwise, until then, we need to play the trampoline brick wall because the conditions have changed. All right, but even now it's 1 o'clock, 1:20. So if you found your opportunities between first, second shift, you're done. If you're just logging in now, say you have some time from work now, you want to make that environmental assessment. It's brick wall, trampoline type of scenario. So either calls off support, puts off resistance, or wait until it gets proven otherwise. Violation, clear violation, break of that resistance, turn support, break and retest comes to fruition. Violation, clear break back below that support. Okay? And then we get that retrace reject. So those are the 4 things you want to look for. So you pick which one you want to look for. All right? So now we're just chopping around, and the things are the environmental conditions are changing. Okay? So today's our first stream of 26. 1 down, 251 to go. Okay? 1 down, 251 to go. And the market gave us some clean movement today, guys. Clean. We just have to be present. We got to be locked in. Again, giveaway 130. 9 more minutes left, guys. Put your name in the chat. You have a 25% chance of winning. So put your name in the chat. For the ones who did sign up, of course, you want no one else to put their name in the chat. It's going to favor your odds. But for everyone else, if you want to have a chance to win the ebook, name in the chat. If you are in the Discord, you put your name in the chat. Then you have access to the boot camp coming up. All right? So you have the boot camp coming up. So we will do the giveaway here shortly. Before we do that, take a quick look at this video that goes over all the features of our
Tired
community.
of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the Spy Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the Spy Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a Spy Striker today, and take your trading to the next level.
Okay, welcome back. So again, if you're looking to join the community, link in the description. That video goes over all the features which you have access to. Need to close above 682.50 for a move. 682.50, that puts us, okay, I can see it. 682.50 between these highs up here. Okay, that's possible. CNBC. We haven't checked in on CNBC yet. They're probably talking about Tesla. Let's see. Okay, so what's the over-under they're talking about Tesla at the moment we log in? Okay, so I haven't taken a look at it, so let's open it up. So, Trump delays furniture tariffs. Okay. Let's take a listen here.
Up against, because if the president says something different in a day or a week or a month, I guess the stock has the opposite reaction.
Hey, John, thanks for having me. And yeah, this has been an incredibly dynamic operating environment for any retailer, let alone this home furnishing space and the broader home space that's seen a lot of moving pieces with tariffs, with interest rates. There's definitely a lot to digest here. But we think that not pushing these tariffs through yesterday as they were supposed to, we think that this signals maybe a broader change from the Trump administration, that they know how important the housing market is for the U.S. economy. Maybe there are some levers at play, push back some of these tariffs. We've heard of rumblings about 50-year mortgages. Maybe there's some other levers that they can pull to get the housing market going again. And that really opens up a gateway to spending, as we dig deeper and try to find some of these fundamental trends that are happening under the surface here, you've had a home furnishings category that's really had all this pent-up demand. It seems like the sector has been stabilizing lately, but it's been choppy at best. And what we've looked at is the 2020 pandemic influx and the stimulus influx and all the activity in the category. That was a long time ago, right? We're 5+ years out from that. There is some type of refresh cycle that we think is taking place that affects Wayfair, Home Depot, Lowe's, all these home connected companies. And sort of this digestion period we think is near the end, if not over. And just look at Wayfair's last quarter, U.S. revenues grew about 9%. And that's a pretty big number for them, taking a lot of share. Speaks a lot to what they've done and drive engagement through their app, drive great selectivity, speed of delivery. So it's coming together, but under the surface, there are other helpers.
I'm looking at Ethan Allen, which, if I recall, had a significant North American supply chain. It's actually down 17% over the past year. And so I wonder to what degree companies have already retooled their supply chains and whether these shifts policy-wise in the short term have much of an effect operationally on these companies.
Yeah, that's right. I mean, a lot of this has happened very quickly. Sourcing product away from China, moving to Vietnam, other Southeast Asian countries, that definitely helps. I'm not as familiar with Ethan Allen, but for Wayfair, for example, they function much more like a marketplace. So they don't actually take on inventory risk. That allows them to flex sourcing up and down, country to country, and allows them to move a lot more quickly.
Okay. So 3 minutes away. We'll do the giveaway. Had to refill on the chai tea. I'm really enjoying the chai tea. Okay. Comment in the chat. Looks like we got another move down like we did on the 31st. Okay, I need to close. Okay. There's a 4-hour FVG. Let's take a look at the 4-hour. 4-hour. H4. Excuse me. 4-hour went to the downside, bouncing off that 200 on the 4. Take off the EMA real quick. Okay, maybe. Okay, you're talking about this one down here, Jimmy. We also have an inversion here. Okay. We're talking about the inversion over here, or this one. You can see there's two of them there. The one at 677. Okay, yeah, this one right here. Yep, I see it. Yeah, so I have room to drop into that territory. We are directional on the week already. We know that already. So the one that's not the one I have, the vanilla. I have this one. But that one is good too. Here's the one I have. I mean, I didn't get it from eBay, but this is it's from Trader Joe's. No, what a link. So remove the eBay link. You know what? Delete. Okay, let me just get you the picture. Really good. For my hot beverage drinkers. I stumbled on it by accident. My wife made it for me because I was sick instead of coffee. And then I was like, hey, you know what? This thing is not bad. All right, so I'm actually been drinking that. I like the spices, the flavor of the spices. Chai means tea in Hindi, tea in English, TT. Yeah, this is the one. So this is the one that I recommend, even for the folks on YouTube. No affiliate. Coffee doesn't taste the same when you're sick. Taste buds out of whack 100%. My thing is just like just the habit of coffee. Because I just drink my coffee black. I like that. The taste as well, but just more of the habit and the routine. Put some ginger, good for the cold. Okay, let's do the giveaway. Looks like 4 people today. This might be the easiest giveaway. 25% chance of winning. If you want to be a part of it, drop your name. Coffee doesn't taste the same, 100%. So I did not know that. I did not know chai meant tea in Hindi. So I learned something new. Learned something new today. I've cut coffee way down. That's not easy to do. Coffee's good. I love coffee. I've cut it down too. I mean, I don't drink as much, but I at least got to get 1 cup in. It wouldn't be a day without a cup of coffee. At least for me. All right, so let's do the giveaway. All right, just 1 spin, 1 in 4 chance, 25% chance of winning. That's a very, very high odd. Today we just took 1 trade. Primarily, I wanted to focus with our team members on the importance of just marking out those key levels, while walking through the process of what I do to mark those key levels out. Because we have a new yearly, we have a new quarterly, we have a new month. And we don't have a new week quite yet. We'll have that weekly candle next week. All right, before we jump into the giveaway, actually, let's go right quickly into where we are. Okay, where we are in the grand scheme of things and what could potentially take place. Let's mark that out. All right, so let's go through that real quick. And we'll go to this chart here, one of my favorite charts. Okay. Let me close out CNBC. Thank you very much. Okay, so we talked about it in detail with our team this morning. Okay, so now what do we see here, guys? 2026 up for grabs. All right. So this is going to be our analysis for 2026 on all the time frames on SPY. So what do we see here first? First things first, we're taking a look at SPY on the yearly. We can clearly see SPY has a 3-year streak of green bullish expansion. First 2 years out of the 3, 20% plus returns on the yearly. This current year, we're hovering about 16-17% return on the yearly for 2025. And now we have a new yearly candle. This officially opens up 2026. So for 2026, if we break above that 2025 high, which is that yearly upside breaker, monthly upside breaker, quarterly upside breaker, along with that potential weekly upside breaker next week, will be directional on all those time frames, which also will make us make a new all-time high to get above that level. So that means if that does take place, guys, we are going to be continuing the expansion. Best approach would be to stay net bullish on the yearly is for you to throw a fib, okay? Equilibrium, okay? On that entire candle, as long as we stay above the 50% retrace, you can adopt that bullish thinking from the yearly perspective. Once we violate that 50% retrace, that equilibrium on the yearly, get below it, at least close under it for a month or so, or a quarter or so, then you can start saying, hey, you know what, we're bullish on the yearly. Until then, we are inside on the yearly, inside on the year. Don't decide. Once we take out that level, look how close we are. We continue that bullish move to the upside. On the monthly, same story remains true. We did get that on the quarterly, I should say, right? Inside as well. So we don't have a direction yet. But we can see for the past 1, 2, 3 quarters, push back the upside. And this is April's push off of those lows when we dropped that 25% correction. So a healthy pullback on the quarter translates to, guys, a 9 EMA test on the quarter. 9 EMA test on the quarter is a healthy pullback, oftentimes hovering between aggressive pullback and bearish territory. Aggressive pullback, bear market territory. What I mean by that, we know bear market, that threshold is that 20%. So where we are from now, right, that puts us at about 12% to get that 9 EMA. So that would be very, very healthy. To get to that 20 EMA, that puts us at bear market territory, right? So that 9 EMA test quarterly, we can potentially see that anywhere from 1 to 3 times this quarter. We don't know when. This year, I should say, but we don't know when. But that can happen. That would be the healthy pullback we want to wait for. All right, but we're still inside the quarter. On the monthly, new candle there as well. On the monthly, we can see how many times we came with that EMAs, nice trend to the upside. We were on a 1, 2, 3, 4, 5, 6 month streak in 2025, right? Just continue to push the upside. We had 1 month pullback, and now we're inside here as well. So technically, we had 1 month pullback, 1 month somewhat of indecision. Although we were directional, we failed to hold enforcement. So if this monthly candle goes green, we trigger those highs. We simultaneously trigger the yearly and the quarterly along with the monthly. Continue to push the upside. That 9 EMA test on that monthly will also be a nice little healthy correction. So unlike it would be a nice little pullback. So unlike that correction, 12% on the quarter, this would be that correction on the monthly. As far as the weekly is concerned, since 2026, January candle opens up in the middle of this week, at the end of this week. So we have 2025's action and January's action this week at the same time. We do not have a weekly candle this week, a new one. This is the existing weekly candle. So next week, once we do open up, we're going to open up inside. Meaning we're going to open up inside this weekly candle. If we take out that high, that means we go 2 down, 2 up, reversal back the upside. If we take out the low, we continue to push the downside. Again, 677.84 will be on watch for that weekly test of that 9 EMA. So what that means is next week, as soon as we open up, all the higher time frames, guys, will be inside. All the higher time frames will be inside. The weekly will be inside. The monthly will be inside. The 3 month, the quarterly will be inside. The yearly will be inside. Simply put, Harami formation. Okay, that means we're inside that prior candle's range. Inside, don't decide is the motto. If you know it, inside, don't decide is the motto. All right. As far as where we are on the daily, okay, we know we went inverse head and shoulder. That played out. We talked about the importance of that. We broke out. We made an all-time high. What we're starting to see, if you see it, you see it, is a certain level of support being put under pressure. Okay, this is being put under pressure. If you see it, you can see it. All right, so you can see that we have these lows. We have right shoulder that form. We discussed that in real time. And then now we have the third touch of support. Third touch of support after making all-time highs. What this tells us, it tells us a lot of information. Going into next week, right? Are we going to gap down? Are we going to gap up? We don't know. We can't really account for that. But we want to see where we are in relation to this support. Right now on the daily, it looks like we're closing below it after going back-to-back days, okay? On Wednesday, Thursday was, of course, New Year's Day. Friday's today, back-to-back days of selling on the daily. If this is legit, going into Monday, if we open up in that territory or a gap down, what we're asking for is a continued slide based off of the structural break. If we gap up or stay where we are, if we stay inside, we need that inside candle to be decided because this is support, right? If this support falls apart, we have a slide back into these lows. If this support holds up, potential push back into that all-time high. All right, so very, very critical way It's going to be critical how we close the day today, and critical to see what takes place on Monday and how we open up in relation to this Friday's candle. This Friday's candle is still relatively, it's at a half-life, has 2 more hours left, but it's really important for us to know where we close, and things will start shaking up once we get into next week. So now, going into next week, there's a good chance, guys, there's a good chance on all the higher time frames we're inside. Yearly, quarterly, monthly, and daily going into next week. So that's your top-down analysis for the bigger picture on SPY. We'll see what does take place. The market looks like it's primed to make a pretty decent move, either to the upside or the downside. We'll have to see how we close in relation to the support. Everything is inside on the higher time frames, right? You know the motto: when inside, don't decide. When it's directional, pick a side. All right? So again, hopefully you found value in that breakdown, and we'll see how this unfolds. Okay, so that's the quick breakdown of what we can see. But this is very rare for us to see, guys. So now you have a chance to take notes and see what does take place as far as that's concerned. So, giveaway time now. If NVIDIA and Avago on Google all dump, this will be very red quickly. Exactly. So the names that were in the lead, if they start to bleed, everything else will get dragged to the downside. All right? Let's do the giveaway. All right? Gar. So Gar is the winner. Gar, congratulations. Send me a message in the Discord. Join the free tier Discord. Send me a message in there. All right. And I will send you a copy of your ebook. Congratulations. Any other questions, guys, let me know. If you enjoyed today's episode, make sure to come back on Monday. Monday we have a new episode. Of course, $2 away from the 50 EMA. I'm not sure if any have enjoyed butterscotch, but I really enjoyed it. I'm gonna have to add that to the fold. Right. Any questions, guys? All right, you guys know what to do over the weekend. Recap, reassess. If you want to follow the checklist, print your checklist. Print 5 for next week. We have 5 days. Print 5 of these for next week. Have them ready. If you have some time, print a copy of your rules. Print a copy of your setup and laminate those things. Put them on your desk, or have them on your phone. Take a screenshot. Make it your background. Okay, make it your background. So every time you see it, you see that. That's a quick hack. Okay, so to reinforce the good habits. For the first month of the year, don't overly focus on the dollar amount. Just focus on the process. Okay? Okay, the process produces the profit. The profit does not produce the process. Okay? It's just one way. There's only one way to it. All right? So just try to get those rules. Follow the rules that you have, whatever restriction you have for yourself. Follow those setups. Abide by your risk management protocols. Make those notes fresh. We have 251 days remaining. Let's make each one of those days count. Let's make each one of those days count. Stack the days. All right. Nothing changes. The same protocols. All right. But we're just looking to constantly refine, constantly get better, and constantly get as close as possible to the ultimate destination. Okay. So again, as far as analysis is concerned, trampoline brick wall, you guys know what to do. If you're still trading, if you're done, be done. If you're green, stay clean. If you're still in the trenches looking for opportunities, okay, trampoline brick wall is the best approach until proven otherwise. All right, but most of you should be done. If you're done, please stay clean. Please stay green. If you extract the profits, if you took a couple of losses, don't let that frustrate you, boil over, and lead to more trades. Just call it. All right, we want to make sure that we stick to those protocols right out the gate. All right, so right out the gate, meaning today was the first day of 26. All right, any questions, guys? Any questions, let me know. If not, we're going to wrap it up here. Just to show you guys, look at our team. It's a tremendous job by our team. 1.6 day P&L on the account. Beautiful job. All right, base it. We got some tremendous traders. And the one thing you'll notice, 83% of the team is green. The one thing you'll notice is Everybody's over sharing their ideas, and no one is YOLOing or doing anything crazy. Everyone is supporting. All right, this is unprecedented, so awesome. Minus 22%, 67%. Great job managing risk. All right, so great job, everyone. If I don't get a chance to shout you out, great job. 40% there. I believe it was Turbo. I think Turbo got 140 earlier. So, again, congratulations, everyone. Hopefully, you guys learned something today. Absolutely, hero. Have a good weekend, guys. Any questions on YouTube, let me know. If you're looking to join our community, be part of our community, kick off the year the right way. Trial is available. Free community is available. The winner of the giveaway, please send me a message in the Discord. The free tier is available. Gar. Okay, Gar, send me a message. I'll send you your ebook. Congratulations. And 2025 is in the books. 2026, we're writing a new book. Okay. Page 1 was today. Page 2 is Monday. All right. So what happened last year, guys, stays in last year. We're just going to leverage the lessons, the experience into this year. Step by step. We finally have a normal, relatively normal week. Holiday, partial week. We have a full week next week. All right. So you can see January jam-packed. Everything. We got everything this month. FOMC, PCE, PPI, CPI, GDP, we got it all. PPI, we have 2 PPIs. And CPI. Unemployment claims, got that. Okay? Every catalyst you can think of, we got it this month. So right out the gate, the game is starting, okay, on hard mode, on Hall of Fame mode. It's not starting easy. All right? So you need to be prepared. You need to be prepared, and you need to make sure you're in line. Take advantage of the opportunities, and on the sidelines, not to get trapped by those traps. Okay, we'll see you guys tomorrow. Have a great weekend. Not tomorrow. I'll see you guys on Monday. Have a great weekend. Stay safe. Links to join the Discord are all available. Free. The trial is available as well. Use those codes. We'll see you guys on Monday. Have a blessed weekend. Enjoy the rest of your festivities for the new year. Continue to do that introspection. Fresh full week next week. And God bless each one of you.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the Spy Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the Spy Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a Spy Striker today, and take your trading to the next level.
Dow, the 10 stocks with the highest dividend yields, outperforming the Dow 30 in 2025, first time in 3 years. And with the Fed expected to lower rates further, will 2026 deliver a repeat performance? Joining me now with her trades is Victoria Green, Chief Investment Officer at G Squared Private Wealth and a CNBC contributor. Victoria, Happy New Year. You like two of the dogs and sending one to the kennel?
Yeah, I did. Yeah, one of them's going to be banished outside. Don't touch it. But yeah, I think there's a lot of opportunity here. We're expecting value to do a little bit better. We think a flight to quality, good, strong cash flow is going to be a really good place to be in 2026. Midterm years typically have a lot of volatility. So one stock I don't think investors should overlook would be Verizon, right? The number one dog of the Dow, the highest yielding, almost 7% dividend yield, has done nothing for investors on the performance side. But a new CEO, right? I think Dan Schulman is great.
How do you play that, though? Because, I mean, he's coming in, slashing and whatnot, but that suggests that there's work to do, which could mean he finds further downside before he finds the upside, no?
I think investors are very forward-looking, and I think the combination with Frontier is great. There's like 29 million subscribers they're going to be able to cross-sell to. I think his focus is very much on how do we make incremental gains, how do we slow the churn, how do we provide and show the value to the consumers. They really feel like Verizon is providing such a great product, and they're doing a terrible job explaining to their customers why they should stay with Verizon. I do see a lot of hope there. I think investors might be optimistic. Obviously, they need to control churn and have some good net subscriber adds here in the Q4. We'll see that under the hood here in late January. But I also think they may be willing to give him a little bit of grace if he lays out his vision very well for where he wants to take the company.
Is there a carrier play in AI?
Well, AI should very much help them reduce headcount, right? AI should, and they've seen that. I think they're laying off about 1,300 people, and that will help them with cost control, which is a huge part. If Verizon can have better cost control, better customer service, nobody really enjoys interacting with their cell phone provider. Honestly, does anybody enjoy it when they have to go in and deal with a network problem or a phone problem or a bill problem? And so if they can improve their customer service without improving costs by utilizing AI, that could be a huge uptick for their overall gross margins.
Unless somebody's serving me yummy food in general, customer service is not something I look forward to. Okay, Merck, how do you feel about it?
I love Merck. I think they've got a fantastic pipeline. I know all of us know Keytruda is coming off. Their exclusivity ends in 2028. It's a huge cancer drug for them. But they have such a deep pipeline. There's a lot to like here. There's a 3.3% yield. It's only like a 13% or 13 times PE. And they've got about 80 things in their pipeline, like 80 solid phase 2, phase 3. They recently just bought and did an acquisition that's putting them in the flu prevention. And I know flu prevention, everybody's like, oh, whatever, we have our flu shot. It's a different flu shot. It's something that's actually long life. It does both A and B strains. It's a huge push for them. Massive $6 to $8 billion a year market for them. I love how forward this company is. I think we've got
fractionally lower, and the small caps doing the best. That's it for us. Thanks for watching The Exchange. I'll see you back here at 4 for overtime. Power lunch is after this break.
Running a successful delivery company has taught me something. You're only as good as your tools. We have AT&T Business, and that's why we're the best.
Rick, you're where? There's nothing here.
Just a trusted connection. Otherwise, what?
You guys are early. Yeah. I like that. Get your signature there. There. You guys thirsty? I just made some lemonade.
It's really warm in here. Like a good warm. You know, my phone still works down here. It's crazy.
Rather than get rich quick, I believe in get rich slow. The high yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
Hey, everybody, gotta get someone off my chest real quick. Gotta find a therapist who really listens to what I have to say.
Better than buddy. Look on ZocDoc, 15, 10, 20 therapists, including the guy right here. Don't just listen, really makes you feel like you're being heard.
So,
you've got options. Download the ZocDoc app today.
Did you know that the costs associated with auto repairs cost Americans on average $7,500? And let's face it, when it comes to those costs, it's not if you'll need repairs, it's when. Now more than ever, you can't afford to be driving without Ox Car Care. Because with A-plus rated Ox, you don't pay for repairs on your car, truck, or SUV. Ox pays.
With Ox, I can take my car to my dealership just like I always have, and they'll take care of everything.
Act now, and Ox will even include free oil changes, free tire rotation, and free roadside assistance.
In the past, I had a really bad experience. I was passed around from phone number to phone number just to file a claim. With Ox, it's just one phone call, one company, and they handle everything.
Don't wait, or it'll be too late. You need coverage before a repair is needed. Call Ox Car Care right now.
Call 1-800-867-8040. Call now.
I got in!
Oh my God.
Wow, this is actually happening. Tuition, housing. All right, Quicken. Will I have to change my retirement plans?
Stop guessing and start knowing with Quicken.
the new year looking a lot like the old year and coming in with a whimper. Welcome to Power Lunch, everybody. I am Brian Sullivan. Kelly will be back on Monday, and you can see we are live here at the NASDAQ market site. Hope you are having a wonderful start to your year wherever in the world you may be, or at least maybe a better start to a year than much of the stock market, because we are now in a 6-day losing streak. Many big names, they are being sold off again. But as you can see from your heat map, a lot of green. It's not all bad. Many of the big chip names like Intel and Micron, they are higher. So what will be the name of the game for the rest of the year? We're going to ask Ed Yardeni in a moment. Speaking of AI, big tech on track to spend $1 trillion in its infrastructure build-out, but where will it get all the power to power the data centers? We'll take a closer look at solar and wind and maybe even space. And Houston, we have a winner, and it's not Houston. We're going to reveal the top city for the stock market in 2025, and that name may surprise you. It is all ahead. Hi, everybody. Once again, I am Brian. Thanks for joining us. Yeah, it's a different year, but really the only thing that has officially changed is the calendar. Much of big cap technology is lower right now. NVIDIA and Alphabet, they are the exceptions. And your lead guest today pretty much called this latest move. Now, that call was because he's not bearish on the overall AI story, far from it, but because there are better opportunities for you in what he calls the impressive 493. Ed Yardeni is still bullish on stocks overall with a 7,700 price target next year. And he joins us now. He is, of course, the president of Ed Yardeni Research. Ed, Happy New Year. Thanks for coming on.
Thank you.
Are you negative on the Mag 7, or just think there are better opportunities elsewhere?
I have a little bit of AI fatigue. I don't know about you, but it's been kind of wearing to be in this AI battles on a daily basis to try to figure out who the winner is going to be, to figure out if all this capital spending is going to pay off. And I think that's going to spread to other investors. I think it already has. And we may see that maybe the valuation multiples on some of these AI trades start to come off. Doesn't mean that technology is finished for the year ahead. As you said, semiconductors are doing quite well, and there's still going to be a lot of demand for semiconductors. But I would put more money in financials, which we've been overweighting. We'd put more money in industrials, which we've also been overweighting. And healthcare, we haven't talked about at all. And we think that might be a sector that does reasonably well this year, especially biotech.
Yeah, you know what? I don't tell anybody, but I also have a little AI fatigue. And being here at the NASDAQ, Ed, is appropriate because I was here back in 1999 before half our audience was probably even born. And we were talking about all the capital spending that was going into the guts, the infrastructure part of the internet, the global crossings of the world. I'm not saying this is going to end like that, but I think to your point, the spending in one group of companies can only last so long before you have to look somewhere else.
Correct. And again, I think what really has changed over the past 6 months or so, maybe ever since Michael Burry pointed out that maybe there's some known unknowns when it comes to the AI trade. I think there's a lot of uncertainty there, and I'm not sure that these stocks merit this kind of valuation multiple. Maybe Google does right now. I happen to own some personally, so I have to disclose that. But that could change tomorrow, or not tomorrow, but next week it could change if some other company comes up with a new thing that's a better chip, that's cooler, doesn't require as much energy, and there's so much money being spent in this area that innovation is occurring at the speed of light.
Yeah, I'm going to use a dirty word, utilities. And I don't mean like power utilities, because those have been largely red hot. But when you look at an Apple maybe and some of these big tech AI names, I do wonder how much growth might be left in them. They're massive cash flow generators, which is why I said the word utility, Ed. But I think to your point, there are faster companies and sectors where you can get the earnings growth that will drive the multiple, that will drive the returns. Where are those? You mentioned healthcare.
Financials, industrials, I think materials, the precious metals obviously have been doing very well and may very well continue that way, simply because we're looking at a year where monetary and fiscal policies are going to be a very stimulative tag team. Monetary policy has been easing since 2024. They've been lowering interest rates. The bond market hasn't cooperated. Bond yields have stayed elevated, but still, the Fed now is doing another version of quantitative easing, at least through the middle of the year, or at least until tax season. And a tax season is going to be bigger than usual refunds because the Big Beautiful Bill was made retroactive to the beginning of 2025. So there's going to be a lot of stimulus coming at the economy. So the economy should be fine. I kind of wonder whether the bond vigilantes are going to act up and say, they don't really like this stimulative combination of fiscal monetary policy.
Yeah, we're here at sort of the center of fast money as well. And on Wednesday, Guy Adami said he thought the 10-year yield might go to 4.5%. In other words, yields would go up even if the Fed is cutting rates. Is that what you meant by the bond vigilantes?
Yeah, absolutely. The bond yield might go up instead of down. I mean, that's what happened in 2024. At the tail end of that year, the Fed decided to lower the Fed funds rate by 100 basis points from September through December of 2024. So they eased, they thought. And the bond market completely offset that as the bond yield went up 100 basis points. This year, they've cut 75 basis points, an additional 75 basis points, and the bond yield really hasn't paid much attention to that. The bond yield remains above 4. It seems to be crawling towards 4.25%. Yeah, that's my most likely scenario, is that the bond yield will stay around 4.5% on average this year, plus minus 25 basis points.
Well, maybe not exactly the news that home buyers want to hear, because I know there's a lot of families out there that are hoping that mortgage rates may go down. Sounds like you think that they may not. You are bullish, though, on the market. Your target 7,700. We're at 68 and change. So where then is that growth, that 8 or 10% that you're seeing, Ed? Where is that coming from?
Well, I think technology and communication services aren't going to suddenly stop growing. They're just going to maybe grow at a slower rate and maybe the multiple gets readjusted slightly to the downside. The Magnificent Seven, only a few months ago, were trading at a forward PE of 30. Now they're probably down to about 27. So they're kind of inching downwards. But I think the opportunities remain in industrials, maybe mid-cap industrials for a change. I mean, onshoring is still going on. We don't know exactly how much money is coming in as a result of President Trump's tariff negotiations, where he said it's going to be trillions of dollars coming in as sort of a quid pro quo for an easier tariff deal. So that could be a source for the industrials. And then financials, I mean, financials are technology. As a matter of fact, the impressive 493 are technology companies because they're going to be using all these technologies to increase their productivity because there's a real shortage of skilled labor.
You know, I like the term impressive 493. I will say, though, Ed, it doesn't quite roll off the tongue like Mag 7, but we'll work on that.
You'll work on that.
We will. And that's what we do. Ed Yardeni, Yardeni Research. Have a great day, a good weekend, and a happy new year, Ed. See you soon.
Thank you. Thank you.
All right. Well, we just kind of talked about it. Let's go now back to the bond market. Stocks, of course, they did well last year, but so too did many bonds. In fact, it didn't get a lot of attention. But the Treasury bond market posted its best year since 2020. Wasn't great, but didn't do badly. Now, though, we turn our attention to the Fed. Not only what the Fed will do at its meeting at the end of this month, but also at some point an announcement from the president nominating a new Fed chair. What do the prediction markets think? Well, it's been changing. It's been fluctuating. But right now, Kevin Hassett, according to Kalshi, with a 42% chance of becoming the next Fed nominee. Kevin Warsh closing in at 36%. Christopher Waller right around 12%. Rick Santelli joining us now from Chicago. Rick, I'm sure you just heard what Ed Yardeni had to say and said he didn't think it was out of the question if bond yields rose this year. What do you think?
I think I'd be shocked if they didn't rise this year, to be honest. So, yes, Ed and I are totally on the same page. And let's start at the beginning. Yes, a decent year for treasuries, but then again, how decent depends on which part of the yield curve you looked at. The 2-year yields and short-term yields were down much more dramatically than 10-year yields. And actually, the truth be known, 30-year bond yields actually closed the year higher than they closed 2024. Now, let's look at a chart of the S&P 500 versus 10-year, okay? Now, this is for the entire year last year. That intersection in the middle is July, but rates didn't really start to go down till the end of July. And the reason I find that so important is, let's look at what happened at the end of July. It was the last Fed meeting where you didn't get a rate cut. The next 3 meetings after July were set acadese. We had rate cuts. Now, let's look at what non-farm payrolls were doing. If you look at the June, July, that's when the deterioration started. So it really does explain why interest rates started to really break away and move lower when stocks were moving higher. And the other piece of the puzzle is stocks moved higher at that point because right around mid-June to July is where the Liberation Day highs were taken out. In other words, after Liberation Day, the equities went down. When they came and finally made a new high for the year after that, that's when everything seemed to change. Now look at the yield curve. Steepest in 4 years on 2s to 10s. What does all this mean? I'll put it together for you, Brian. The more steepness in the yield curve, the more the argument that Ed Yardeni and I are making gets pushed into reality that long rates are showing us they want to be more stubborn. Yeah. And if you want to know how good of a year you're going to have in treasuries, especially looking at the short end, monitor the jobs market because the Fed chair, in my opinion, is not going to make a whole lot of difference. It's all about the economy, and within that subset, it's all about jobs.
That's amazing because I get 2 questions. People, very nice viewers, they spot me out, they want to talk, whatever, I'm approachable. They ask me about NVIDIA. Where's it going? Should they sell their home and put all their money in NVIDIA? No, don't do that. But the second biggest question I get is where are bond yields and mortgage rates going? I should tell them Rick Santelli says probably higher?
That's what I would say. Definitely probably higher. And I think 4.5, maybe a little low for the high of the year. I think it could be more like 475. Wow. But if I had to make a call, I think the high frequency yield trading 10s for the first half of this year is going to be 4.37.
I like it. See, also also am dropping your name, Rick, so I'm covering my own derriere. Well, Rick Santelli says, Rick, Happy New Year. Thank you.
Happy New Year.
All right, folks, we are just getting started, and in a few minutes, we are going to reveal the biggest winner for the stock market, city-wise, this year. It's our Power City Indexes. It's coming up exclusively in a few minutes. But up next, can NVIDIA keep its title as the king of AI, or is a new king waiting in the wings? Christina Partsinevelos is waiting in the wings. She's here, and we'll talk about that next.
Income.
Wake up! We got pain to relieve by morning. Ice, hot, lavender! Icy hot, nighttime recovery. You're so back.
Please, Dad, can we keep him?
He's perfect. But dog food, vet bills. Is this coming out of the college savings? Quicken, can we do this? Nice.
Okay, let's take him home.
Stop guessing and start knowing with Quicken.
You've forgotten to get that special someone in your life a gift. Well, Mint Mobile is extending their holiday offer of half off unlimited wireless. So here's the idea. You get it now, you call it an early present for next year, like 11 months early. What do you have to lose?
Half protection is not enough. Using just an antivirus online is also not enough. Get better protection from online threats. Hit NordVPN now.
The new series, CNBC Leaders Playbook. Valuable insights from the C-suite. Direct.
Leadership sometimes is swimming against the current.
Surprising.
You do fake it as you go.
Inspiring.
I have a huge imagination for what's possible in the world.
Julia Boorstin goes inside America's leading companies. Strategies for success straight from the top.
That was an aha moment for me.
Back-to-back episodes. CNBC Leaders Playbook premieres Wednesday, 10 p.m. Eastern.
Until I tried Ninja Transfers, the idea of making a custom t-shirt sounded crazy. But now I've made tees, hoodies, totes, even spandex leggings. I just use my iron and I DIY like a pro. Place it, press it, peel it. That's it. Ninja Transfers makes it so easy. Visit ninjatransfers.com today. Use code TV20 to save 20% right now.
The scent won't stop you stinking. You need the right tool for the job. Man will make sure that your armpits are up to code. Don't mask it. Mando it.
All right, welcome back. Let's talk about NVIDIA because Jensen Huang and company, they're going on all-out offense to defend their company's crown as the kings of AI. It's a $30 billion spending blitz aimed at squarely the next phase of the AI arms race, something called inference. We're here at the NASDAQ. Christina Partsinevelos is also here and has that story. I know you got some things, but what is inference in like layman's terms?
It's literally so let's say you're a doctor, you train, you go to medical school to become a doctor. That's the training part. The inference part is me saying, oh no, I got like broken tooth or a broken arm.
You go for a dentist for that.
Yeah, I know, because I had lipstick on my teeth, so you were just nicely telling me that. And so you're the doctor, you're providing the inference of the answer, which is the short version of it.
So what's up with this? What's up with this spending blitz?
Massive bet. Thank you. Is making a massive bet to dominate the battleground in AI, potentially spending up to $23 billion to do it. In less than 4 months, the chipmaker has executed 2 major deals and is potentially pursuing a third, all focused on inference. So the technology that runs AI models after they're trained. hopefully that doctor analogy worked. But first, in late December, NVIDIA closed its largest deal ever, around $20 billion for Grok with a Q. It's inference chip technology. They brought in its founder, Jonathan Ross, who also created Google's TPU chips. Those are their custom chips that did very well in the most recent AI models, Gemini. Second, in September, NVIDIA paid over $900 million for Infabrica's networking technology that really helps connects AI chips while also hiring its CEO and key staff. Third, NVIDIA is reportedly in advanced talks to buy Israeli AI startup AI-21 Labs for roughly $2 to $3 billion, according to local Israeli media. AI-21 only does about $50 million in revenue, but the deal is values at roughly $10 to $15 million per employee for their 200-person team, many who have PhDs. It's a pure talent play. NVIDIA declined to comment on that deal. NVIDIA owns roughly 90% of the AI training market, but inference is just fragmenting very quickly. Inference is cheaper to run, doesn't need the same horsepower nor the same memory, and so that opens the door for competitors, Google, Amazon. So many companies are trying to create custom chips. They're popping up everywhere. Although that AI-21 deal is not done just yet, the spending strategy is clear, and that is to lock down inference talent, especially talent and technology, before the competitors can.
Fair enough. And we don't know if they're overpaying for this stuff. There's a lot of great restaurants right around us here in New York. I could pay $30 for a plate of spaghetti or $200 for the same plate of spaghetti, and it doesn't mean it'll be any better. I wonder if they're overpaying. You don't have to address that, but we can address the stock price. Bring that chart back up. Here's the dirty little secret. NVIDIA stock hasn't done squat in about 6 months.
Well, it was the October high, so that was a lot.
So what are people, but the stock's basically been flat. Yeah,
right.
It popped up a little bit in October. Why is that stock chart not moving? What are people saying about that?
So in regards to the stock, or just over the last little while, one, there was profit taking in many of these AI plays, but two, it's just like, what's the next big catalyst for NVIDIA? And so they're turning to other plays like memory, right, that has seen a gigantic, I know you just talked about that, a gigantic surge. So the upside for many stockholders is like, let me move into the other picks and shovels of the AI trade. To your comment about spending too much, NVIDIA has roughly, $80 billion of free cash flow, which is estimated to be $96 billion by the end of the fiscal year, to increase 58% next year. So there's a lot of cash on hand, and they need to do something. They roughly spent about $52 billion in buying back shares to help shareholders. What else are they going to do?
Well, they're buying companies. You just said it. They're spending billions and billions and billions of dollars to buy companies.
They're a large company, so they can't just buy it. So they're doing these
fake deals, like this Grok thing. They didn't buy Grok, but they kind of bought Grok because they're bringing the CEO over. But Grok, I guess, will still exist. Do we call it a deal? We call it a merger? What do we call it?
We call it an alliance or a partnership, which seems to be the norm, right? If you talk about OpenAI, all of these deals with AMD, Broadcom, et cetera, everybody is just, frenemies almost in a way now.
Just don't call it a comeback, because they've been here for years. Christina Partsinevelos, thank you.
Thank you.
All right, after the break, a serious crude reality check as Iran brutally puts down economic and social protests, the global impact, and a discussion on oil and energy. Next.
Comcast Business Advanced Networking and Security Solutions help turn businesses into logistics mastering, supply chain transforming, seamlessly restocking, frictionless paying, poke bowl ordering, cyber securing, mobile access granting, data managing. Welcome
I love my smile.
I wish I could get implants.
I wish money wasn't so tight.
I wish I can justify the cost.
I wish my insurance could save me more on dental implants.
See what it can do at ClearChoice. Show us your insurance card and save $5,000 on fixed full double arch implants. That's insurance assurance on a smile that's built for life. Schedule your free consultation today.
After Homoglow cleaned our place for $19, we fired our old housekeeper. Homoglow tackled everything from our kitchen to our bathroom, all our laundry. You just pick a date, pick a cleaner, and enjoy a spotless house for $19.
When expectations are high, there's no room for uncertainty. To maximize impact, your logo needs to look great, on the right gear, and arrive on time. And that starts with 4imprint. Visit 4imprint.com.
4imprint for certain.
Become a smarter investor with CNBC Pro. Exclusive live events.
This is my first time at the stock exchange, and it's been awesome.
To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/getpro now.
Welcome back. Let's talk oil and energy. Crude oil slightly lower to start the year. This after a big 20% drop in 2025, and that was the worst yearly performance since the year 2020. Supply and demand appear out of balance, with way more oil than needed on the market right now. But as always with oil, there are also many geopolitical risks, including growing tension in Iran, where the Iranian regime is aggressively and violently putting down protests over that country's bad economy and lack of social freedoms. And now the president vowing to intervene, Trump tweeting out basically that if Iran kills peaceful demonstrators, the United States may get involved. Bob McNally is founder and president of Rapidan Energy Group, and he joins us now. And Bob, wanted to welcome you on, talk about your outlook for the year. Obviously, Venezuela's out there, but things are really getting ugly or uglier in Iran. Russian planes are landing. It looks like they're helping to maybe put down some of these protests. Do you think that Iran is going to be a flashpoint or a bigger flashpoint for the energy markets this year?
Brian, Happy New Year. I do think Iran is going to be a flashpoint. Mainly, though, if we step back behind what the president just announced, and we think Israel means it. I think Israel's not done with Iran. They want to suppress Iran's missile and nuke capabilities. So we've got 70% probability of renewed Israeli strikes on Iran in the first half of this year. With regard to the president, I don't see a major U.S. military campaign, but the U.S. certainly in for selective strikes or sanctions if Iran kills protesters. So we think Iran's going to come back. But the thing is, Brian, if you look at it, since Iran attacked Abqaiq in September of 2019, biggest disruption in modern history, it's been a nothing burger. And the traders have been just discounting that there'll be a material disruption. You see that in today's price action. So we're not necessarily saying there's going to be a major sustained disruption in oil supply, but Iran is going to feature, Russia is going to feature, and to some degree, Venezuela is going to feature on the oil market screen, we think, this year.
It is truly one of the only, or at least maybe the biggest global market along with currencies. And everybody's just pointing to supply and demand, Bob. You can look at the different estimates, and I know that OPEC will disagree with some of the numbers, but you've got in some estimates, billions of barrels just kind of floating around in storage on super tankers to nowhere, being held up. How do you see supply and demand, not only right now, Bob, but where it's going in months and quarters ahead?
You know, Brian, I've been counting barrels for over 30 years, and I've rarely seen a time where there's such difference about what's happening just ahead of us in the coming quarters. Some see, like the IEA, 4 million plus barrel a day surpluses in the first quarter. Rapidan, we're a little lower, a little about 3.5 million barrels a day. But 40s. Not 100% probability. They may be late. They may be too small, but they think the intention is there if needed.
Because I got to be honest with you, Bob. One of the things that makes, if somebody said, are you bullish or bearish on the price of oil? I would lean to the bullish side. I don't think oil is going to surge. I've been bearish. In fact, last year and 2 years ago, I was in print bearish. But I would say one of the reasons I am a little more bullish is because everybody and their mother and their relatives appear to be negative. I can't find an oil bull to save my life.
Absolutely. From a contrarian standpoint, makes sense to be bullish. Another reason, though, Brian, and you and I have been talking about this for years, we'll look at 2025 as the year that the peak oil demand narrative died. And I think the market is adjusting, and industry companies are adjusting to the fact that by no means are we on track for peak oil demand by 2030. That means we're structurally short in those out years. So even if we have this near term oversupply, I think one reason you see the equities holding up quite well during this, despite the best pessimistic sentiment on next year's prices, is because they realize the 10-year outlook is suddenly much brighter than everyone's been thinking for the last 5 years.
Yeah, it's just some of these projections, I don't know where they're, respectfully to the groups coming up with them, I don't know where people are getting these numbers, Bob. They're like, oh, oil demand's going to peak out. Really? Because a couple people are buying electric cars in wealthy nations? Look at emerging markets. The reality is that half of oil in the world is not used for transportation. It's used for other stuff, things that are growing. I just don't know where some of these numbers are coming from.
Well, I think during the sort of Paris Accord Agreement era, there was both wishful thinking and official forecasts that said, look, not only should we kill oil demand with EVs, but we will. And we won't allow any forecast that contradicts that to appear. That proved misplaced. Hope is no basis for forecasting investing. And I think to their credit, the IEA and others, we're seeing other major forecasters, are all swinging back to reality as we have been predicting, to their credit.
Yep, and even, by the way, the European market in the IEA's backyard is now talking about getting rid of EV mandates and going back to the gas-powered car. Bob McNally, Rapidan Energy Group. Bob, thank you. Have a happy New Year. Have a good weekend. We'll see you soon.
Thanks, Brian.
All right, coming up, we'll stay on the energy story. Can wind, solar, or even space power AI? Is the energy out there to make these dreams that are maybe holding up the market happen? We're back on Power Lunch on the NASDAQ right after this.
After their bloody assault on October 7th, after booby-trapping buildings and turning mosques, schools, and hospitals into military assets, Hamas is still spreading terror. If you want a ceasefire that lasts, if you want human rights, women's rights, equal rights, freedom of speech, then you need to protest Hamas. Hamas must disarm, and radicalized Palestinians must reject hate. Choose freedom, not terror.
At Public, the high-yield cash account's a no-brainer. I know my money's working hard for me, and I know I can access it anytime I need it. It's very simple. Better rates mean faster growth, and that's exactly what I need.
Wow, this is actually happening. Tuition, housing. All right, Quicken. Will I have to change my retirement plan?
Stop
Now, this follows the Dominion energy lawsuit after the Trump administration paused several large offshore wind developments, citing unnamed national security concerns. Shares of Copenhagen-listed Ørsted, it jumped about 4.5% on the news, but the fight over big wind is not over, particularly with all the projections for all the power we're going to need to power our lives, data centers, AI, and, just the heat and lights. Let's bring in big thinker Stephen Bird. He is Morgan Stanley's global head of thematic and sustainability research. This is also, to give a little tease to my own piece coming out this weekend, one of my 7 big energy themes to watch next year. What happens to big wind, Stephen? What do you think is going to happen here?
Yeah, I think when we think about just what you mentioned earlier, and Happy New Year, by the way, when we think about the source of energy we need for AI and just industrial growth, even electric vehicles, wind is relatively small. It's a rounding error relative, for example, to the energy we need for data centers. The location is typically not ideal from a data center perspective, and the cost, frankly, is high. The United States does have a massive land mass. There are fundamental questions about sort of the cost and the importance of offshore wind. So I don't really view it as a primary player in terms of what we're going to need. I look more to natural gas. We'll have some degree of storage. With solar, we'll see quite a bit of nuclear. I just don't see wind as being a primary actor here, to be honest.
I think the theme, and you're the thematic guy, so tell me if I'm wrong, Stephen. I think the theme is, if you build a giant wind farm off the coast of Massachusetts and that powers 600,000 homes, I'm making the number up, that energy that's going to the homes from the wind turbines will then be used for other things. They don't have to necessarily power data centers. Use the wind to power homes, and then use the energy that was going to power the homes to power the data centers. That, anyway, is the argument that they would make.
Yeah, and I just don't find it compelling because when you look at the Northeast, there's very little data center activity compared to other parts of the United States. A big part of that is cost of power. If you look at the overall cost of power in the Northeast, it's just much higher.
Yep.
Total volume of available power is quite limited, even with some degree of offshore wind coming online. So I just don't find that very compelling. When you look at the average cost, for example, in the state of Texas for power versus, say, Massachusetts, it's just much lower in Texas. And I think that's a big driver for why we're seeing so much more data center activity down in Texas.
By the way, as you said that, I just looked at the Boston power grid, because it's all online, and I'll post it. A couple percent of their renewables power right now is coming from trash. They're literally burning trash. Do you see any indication, besides Texas, that other parts of America are getting, I don't want to say smarter about energy, because a lot of people disagree with that theme, but that they're starting to have this energy realization that they're going to need more power from somewhere, and that could benefit the nuclears and, dare I even say, the natural gases of the world.
I do. What I see a lot is awareness of overall power bills. I think a major theme of the 2026 election will be affordability, and customer utility bills are a huge part of that discussion. In the election we saw in November, states like New Jersey, Virginia, Pennsylvania, power bills were a major area of focus. So when you take a hard look at the approach to getting power bills low, it tends to involve natural gas, but not just natural gas. In many situations, solar is very low cost, energy storage is dropping, and then I am optimistic at the turn of the decade that nuclear will fall in cost and will be a big part of the solution as well. So to your question, I see immense political focus on affordability. I think, frankly, that's healthy.
I think it's my number, by the way, again, preview to my piece coming out this weekend, number one risk is that political pushback against data centers. Apollo Global, you might have heard of them, sort of semi-competitor to you, so I won't bring them up. I want to pivot, Stephen, to a topic, of course, that we've talked about a lot, the AI revolution. Listen to this. Earlier this week, we spoke to the CEO of Planet Labs. As you probably know, they recently partnered with Google on a project to build, or at least explore building, data centers in space. Here's what he said.
When launch costs come down a certain amount and those satellite costs come down a certain amount, eventually it's cheaper to put compute centers in space. In principle, you get free power, free cooling in space. The only challenge is that it costs a lot to build the satellites and launch them.
Now, this all comes as your team projects a 47 gigawatt cumulative shortfall in power demand versus supply. Again, for our audience, put in perspective, 1 gigawatt of power, rough shortfall.
That's right.
Do you expect data centers in space and relatively soon?
I think we will see data centers in space. We are bullish that the unit cost of getting, anything sent to space essentially are going to drop dramatically. I agree with the points on cooling. I do think it makes a lot of sense. That said, the companies I talk to, they're not waiting. They're pursuing all of the above. And I have to say, it's sort of a race of innovation to see whether data centers in space or fuel cells or natural gas or Bitcoin conversions, which will get us there the fastest. I am pretty encouraged by just the land-based solutions that I'm seeing. Pretty impressive stuff in terms of just, innovative approaches to getting that electricity to data centers much more quickly.
If this happens, Stephen, and I hope it does soon in our lifetimes, you look up and like, oh, that's a data center, through a telescope, of course. Who's going to win?
Well, I'd say the big space players you would imagine would be a big part of this. I also think the hyperscalers would win in the sense that what they desperately need is more compute. One big theme we see is the demand for compute looks like practically a straight line up. It is growing so quickly. So the AI adopters, AI enablers, they just need more compute. So if we can actually get data centers in space at low cost, I think that's a big advantage for everybody across the AI ecosystem, except for the land-based AI infrastructure players. That would clearly be a negative for them because the perception is you don't need to spend these large premia on these land-based solutions if you can get data centers in space.
And then you wonder, if we get data centers in space and they work, what happens to all the data centers we're currently building and we talk about every day? But we'll save that for another segment because we have to go. Stephen Bird, have a great weekend. Happy New Year. Thank you.
Thank you.
All right, let's get now over to Stephen Kovac for a CNBC News update.
Hey, Brian. Yeah, Russia is denying involvement in an attack on a multi-story apartment building today in eastern Ukraine. Ukrainian officials, they say at least 25 were injured, but Russia's defense ministry claimed the reports are untrue. And they suggested the blast had been caused by the detonation of Ukrainian ammunition. The ministry also accused Ukraine of trying to distract from a Ukrainian strike on a hotel on New Year's Eve that killed nearly 30 people. Meantime, Saks Global announced today its CEO Mark Metrick is stepping down amid reports the retailer is struggling and preparing to file for bankruptcy. Metrick has been with the company for nearly 30 years and led Saks' 2024 merger with Neiman Marcus. A federal appeals court delivered a win to Paramount today, ruling Top Gun Maverick did not infringe on the 1983 article that inspired that original Top Gun movie. The family of the writer argued the 2022 blockbuster shared plot, characters, and themes with the article, even after they terminated their license with the studio in 2020. The court, however, said the sequel was, quote, largely dissimilar from the original article. Brian, back over to you.
Did you see it? I haven't seen it.
I have not seen the sequel, only the original.
We're the two guys.
Probably the two only men in America who have not seen it.
Talk to me, Kovac. All right, Steve, thank you very much. Appreciate it. I got something to do this weekend, I guess. All right, coming up, the best performing city for the stock market, the big reveal of our 2025 Power City Index winner is next.
When Betty and George turned 50, they figured out that switching two unlimited lines from big wireless to consumer cellular could save people up to $600 a year. So they made the switch and started splurging on date night, and it became their favorite night. No, don't you dare. It's an acquired taste. If you're over 50, get two unlimited lines for $30 each. And right now, get your second month free. Call Consumer Cellular.
If it were possible to discover in advance which stocks were set to go up and which were poised to crash, would you want to know? Check it out. On August 22nd, 2024, I told viewers the road to artificial general intelligence was already bringing massive changes to society and disrupting industries around the world. So I recommended buying a group of stocks that I believe would benefit, including these. Then I set to sell a group of stocks before they got wiped out on the road to AGI, including these three. research at no cost before. So take advantage of it while you can still get into these companies at great prices. Visit the website on your screen or simply open the camera on your phone and point it at the QR code right here to see the names, tickers, and my full analysis while you still can.
Critics' Choice Awards coverage starts Sunday at 5 when the supernovas of fashion pose for the Glambot.
I am feeling great right now.
After the carpet comes the celebration. The Critics' Choice Awards hosted by Chelsea Handler. Curtain goes up Sunday at 7 on E! and USA.
2:45 here on the East Coast. Time for our big reveal. Which city or metro area won the stock market in America in 2025? We showed you on Wednesday it was nearly too close to call, but there can be only one winner. So let's count you down 3-1, the top 3 cities and areas for the stock market in America vis-a-vis our Power City Index. The third best metro area, Washington, D.C. Its PCI had a median return of 16.8% over the past 12 months, led by big gains in RTX, Capital One, General Dynamics, and more. Obviously, defense spending, one of the big market themes of 2025's, and those stocks reflected it. The second best area for the stock market, not a city at all. It's a metro area known around the world. It's Silicon Valley. The 12 biggest companies in our Power City Index in the Palo Alto and San Jose region had a big 20.2% median return this year. 3 of the 4 A's powered the gains. That would be AppLovin, Alphabet, and Applied Materials. In fact, only ServiceNow fell in the Silicon Valley Power City Index, but the decline big enough to bring the median return down. And your king of the stock market 2025 is the Queen City, Charlotte, North Carolina. It narrowly topped Silicon Valley, and Charlotte's 12 biggest companies posted a median return of 21.1%. You had big gains from Albemarle, Curtiss-Wright, Nucor, SPX, and Bank of America. So a big congratulations to Charlotte, North Carolina. I mean, even the Panthers are good in football this year. So everything is kind of looking up. The top city in your Power City Index for 2025, Charlotte, North Carolina. By the way, second time in a number of years, a North Carolina city has won the competition. If you remember, because this is our 10th year doing this, Raleigh was the top city a few years ago, which, by the way, lines up very nicely with CNBC's and Scott Cohn's top states for business. Charlotte, congrats. I certainly hope that all of you are benefiting from those stock gains. All right, coming up, we're going to talk cars and also ask if robot cars or just robots are the real secret to Tesla investors' future.
Today's digital world is full of risks. I present to you the world's most protected business.
Creed, we have AT&T Dynamic Defense.
It prevents malicious threats. How are people supposed to get in? There's no door.
Somebody say door. Light 'em up, Bobby. My man.
AI can turn your lights on
Lights on.
and drive your car and even write your kid's essay. But AI ain't gonna fix your broken water line or pay for the big repair bill. Having a plan from HomeServe offers real solutions, and when a covered system breaks, we'll send a qualified contractor and pay for the repair. There's nothing artificial about the peace of mind you get with a plan from HomeServe. Getting one is quite intelligent.
Plans from HomeServe start at just $4.99 a month. Call 1-800-324-1464 or visit homeserve.com.
When it's time to start your business, it's time for Shopify. Designed with easy to customize themes, sell everywhere people shop, and never miss a sale with the world's best converting checkout. See why millions of businesses sell with Shopify. Start your free trial today.
production and delivery numbers. And for the second year in a row, Tesla reported an annual decline in fourth quarter deliveries. They fell about 16% year over year. Full year deliveries down about 9%. The focus now shifts forward, though. Company expanding beyond EVs. Let's talk about it. Phil LeBeau joining us now. Phil, the numbers weren't great. The stock not taking a huge hit. Are investors kind of largely looking past the automobile, or maybe the human driver automobile for Tesla?
Sure. Well, certainly with regard to the numbers for the fourth quarter, they are. I mean, look at these numbers. This was expected to be a lackluster quarter and a lackluster year, and that's what we got. 418,227 vehicles delivered. That was down compared to what the estimate was going to be 426. Tesla said it might be around 422. Regardless, they were not good numbers. 2025, 1.63 million vehicles were delivered. Again, that's a decline compared to 2024. Second straight annual drop for Tesla. And in terms of annual deployments of energy, this might be the bright spot within all the news from Tesla today. It was up 48.7%. Look at this. This has been a bright spot that has not gotten a lot of attention, Brian, in terms of where Tesla has been. And when you look at where they are, this is expected to grow maybe not 49% in 2026, but we know the story there. There's demand for energy, and Tesla is taking advantage of that demand with their energy deployments. Remember, as you take a look at shares of Tesla, we will get their fourth quarter earnings and, more importantly, commentary from Elon Musk on January 28th after the bell. And he's likely to talk not about deliveries, not about the conventional auto business, if you will, or EV business, if you will. He's going to talk about what he believes are the drivers of growth in the future for Tesla. And this is the reason the stock was up almost 20% last year. You've got the robo-taxi rollout. Regardless of the fact that it is not going as fast as many thought it might, people are still optimistic that they will continue growing and growing at a quick pace in 26. Cybercab production begins to ramp up maybe in the middle of the year. And then you have the Optimus robot development. Everybody's all over the map on this. Some people are saying his estimate of 1 million robots by 2030 is ridiculous. Others who are saying if Elon can do it, he'll do it. So why not buy into it? Finally, take a look at shares of Tesla and GM. The reason we're showing you this, Brian, we've talked about this over the last couple of weeks. GM outperformed Tesla purely as an investment in 2025. And I know whenever I show this chart or talk about this in the last month, I will get these texts from people saying, yeah, but go back and look at Tesla over the last 5 years. That's not the point here. The point is this was a great year, or 25 was a great year for investors in General Motors. Does that continue? We'll find out on Monday what their Q4 numbers look like in terms of sales. And 26, by the way, Brian, is expected to be maybe slightly higher in terms of total auto sales, though most people believe we're going to continue to see things pull back a little bit.
Is there anybody out there that's saying that Tesla's pretty much locked up the EV market with a little Rivian and maybe Lucid on the side? You sprinkle in a couple of Silverado EVs. We know that Ford's having their problems. And that kind of Detroit should maybe leave the EV market to Tesla and a little bit of Rivian and some others and focus on Tahoes and Expeditions. Is that a
Well, they clearly are. To an extent, Brian, to an extent they are. They are pivoting more towards internal combustion engine vehicle development and production, ramping that up and de-emphasizing EV production. But let's be clear here. GM, Ford, and Stellantis as well, they're not giving up on EVs altogether. Do they expect them to be major growers in profit areas in the next 3-4 years? No. But you and I know how this works.
take them home.
Stop guessing and start knowing with Quicken.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher Investments Difference. 3 indispensable guides, yours free for calling 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit, 1-800-213-5317.
See if your dream retirement is on track.
If your portfolio is $1 million or more, call Fisher today. Call 1-800-213-5317.
As teachers, taking care of ourselves is taking care of our students. AG1 gives me a little bit of kickstart to my day, and I know it's full of ingredients that help support my immune system. I've got a whole classroom counting on me. I don't want to miss a day.
Here's up, Coach. Meaty's here. Watch me work, baby.
I'm sure they're here to see the commissioner of coverage.
Excuse me,
Commissioner! When health insurance doesn't cover everything, what's the move?
What commissioner means is that Aflac gives you cash to help with all those medical bills.
We think you're amazing.
I came to see you, huh?
Get help with expenses health insurance doesn't cover with Aflac.
How do we get Aflac?
Man, they gotta ask about it at work.
They are working.
It is a new era at Berkshire Hathaway. Greg Abel has taken the helm after Warren Buffett's legendary 60-year run coming to an end. An exclusive interview with Becky Quick, the Oracle of Omaha, gave his seal of approval for his successor.
I'd rather have Greg handling my money than any of the top investment advisors or any of the top CEOs of the United States.
That is a huge endorsement.
It is a huge endorsement, but it's an endorsement we've made.
And don't miss the rest of that interview during our primetime special. Tune in on Tuesday, January 13th, 7 p.m. Eastern Time. That's a big one. All right, folks, markets are coming back. Maybe we end the first trading day of the year higher. I'll see you on Fast Money at 5 p.m., but closing bell starts right now.
Welcome to Closing Bell. I'm Courtney Reagan, and today for Scott Wapner, we are live from Post 9 at the New York Stock Exchange. This make or break hour begins with stocks sputtering to start the new year. Markets coming off a roller coaster end of 2025. Key questions and risks remain, and we will ask our experts about all of that over the next hour and more. Let's get a check-in on the scoreboard today. You see the Dow is leading the way 0.6% higher. NASDAQ lagging, but just by a hair here, and S&P 500 higher by about 10%. Key chip names are surging, though. Micron, and what a year it had in 2025. Intel and NVIDIA all higher here today. Other areas in tech outside of chips suffering a bit, including software names like CrowdStrike and Salesforce. But look at RH, Wayfair, and Williams-Sonoma. Those names are surging after President Trump announced a one-year delay on those previously
saying that this is the year we need to see the adoption, we need to see the productivity, we need to see the earnings growth. I mean, maybe, but I don't know that. I know right now, again, on the investment side of things, CapEx is still enormous, hundreds of billions of dollars. Demand still exceeds supply. It's benefiting, as you mentioned, Micron, NVIDIA, Broadcom, on down through the infrastructure, the industrial type names that are helping this build out. And again, I don't know why all of a sudden, it'll happen. I don't have any evidence for why all of a sudden with the calendar turn, I now need to see Procter & Gamble have AI productivity and efficiency gains. Maybe, but I don't know.
Fair enough. And then consumer resilience. That, when I was trying to think about 2025, was one of the key themes to me that admittedly surprised me, because if you would have said retail stocks or consumer tilted stocks would have ended the way they did, albeit less than some other names, but still after the April 2nd announcement, pretty amazing what the consumer has done in the face of all this pressure.
I think that's exactly right. At the highest level, you can look at the credit card companies, American Express, Capital One, MasterCard, Visa, obviously they're all close to or near record highs. That captures obviously all spending. But at the specific stock level, you've got a couple things working for you. Clearly the low-income consumer, we know this for 2 years. I don't need to repeat it. The low-income consumer is challenged. But to make the point of how difficult investing is, well, what if I told you the low-income consumer was challenged? We better short Dollar Tree and Five Below. And those companies are experiencing a tremendous rally. And in the case of Five Below, which was dealing with shrink and a lot of other problems, they've figured that out. Margins are benefiting, so that stock is up a whole lot. You also have turnarounds in Ulta and Deckers and Kohl's, names that you're obviously very familiar with. And then at the highest level, you have companies that are just resonating. Brand resonation is doing quite well with Tapestry and Coach and Ralph Lauren. Aspirational, higher income, but still doing exceedingly well. So yes, you have some trouble in the space, but on balance, the consumer has been incredibly resilient. Not surprising to me, I might add, because I think the jobs market, not great, but not terrible either. And as inflation has come down, real income growth has been positive, and I think that's been a powerful support for the consumer in general.
And then you talked about the Fed remaining accommodative, even if there are not more than one rate cut. You say, well, they're not going to hike, so it's good enough.
Yeah, I think that's probably right. But let's also remember that if you had to put in a hierarchy of importance, the Fed or the AI story, I think the Fed takes a back seat to the AI story. Yes. Now, that's not to say the Fed's not important, but if you told me next year I could have, as expected, 50% or so, whatever, net income growth for Broadcom, for NVIDIA, less so for some of the other names, but I could have the type of growth that I'm anticipating with one less Fed cut from the Federal Reserve, I would certainly take that scenario. I think that story is driving markets down through the industrials, down through the financials, through some of the materials names, the power names, as we know. It's spiderweb throughout the entire market right now. I think it's far more consequential. But again, it is helpful to have the Federal Reserve talking about additional liquidity in the market in the form of reserve purchases. They're probably going to cut rates a couple of times. I caution viewers. The Fed walked back some of their rate cut predictions for this year. I think some of that is positioning in front of what might be a super dovish incoming Fed chair, and so maybe there's some politics going on there. But again, the point that you made, which I made before that, you're reiterating, I agree. They're very unlikely to raise rates this year, and that's probably more than enough, more than anything else good enough.
Okay, so those are some sort of 3 tentpoles that we can work on throughout the show. Stick with me for a second. I want to send it over Christina Partsinevelos because she has a closer look at some of the big moves in the chip names today that we talked about here.
Yeah,
Hi, Christina.
Hi, Courtney. The semiconductor stocks really just rallying to kick off 2026. Flash memory names really leading the gains. SanDisk jumping 14%, while Micron gaining about 10% right now. Chips are higher for 2 particular reasons. First, you got next week's Consumer Electronics Show, CES, where NVIDIA CEO Jensen Huang and AMD's Lisa Su and many others are going to be giving speeches, panels, etc. So let's just call it the pre-CES trade. But the more immediate driver today is a wave of positive headlines coming out of Asia. You have Chinese AI chip designer Shanghai Biren surging 76% in its Hong Kong debut today, showing just so much appetite for anything AI and chip related in China. Then you also have Chinese tech giant Baidu filing paperwork for its own chip unit IPO. Then you had memory maker Samsung CEO saying Samsung is back, that was the quote, signaling the company is closing in on a deal to supply NVIDIA with high bandwidth memory. In other words, demand is very strong. And also just 2 days ago, TSMC secured a 1-year license from the U.S. government to keep importing American chip-making equipment into China. All of that, TSMC up 5%, all of that fueling this buying right now. AMD
stuff, Christina. Thank you for giving us so much detail on all of that. Do appreciate it. We're going to bring in Robinhood CIO Stephanie Guild and MetLife's Drew Mattis. So Dan Greenhouse is still with us, of course. I'm going to start with you, Drew, because I think you have some points that sort of piggyback off of what Dan was thinking about the Fed and the likelihood of them at least to not cut rates going into the new year, even if we don't know who the Fed chair is, even if we know that there's somewhat of a division on where we should go from here. How important is the Fed's monetary policy to the new year?
Well, I think it's actually quite important because I think if you're talking about the behavior of the markets around a curve steepening versus a curve flattening, a curve steepening is much more supportive of kind of what we're hoping to see in the new year. For most of Dan's points, he and I align a lot. But I would say that one thing I'm a little concerned about is actually how sustainable the U.S. consumer story is into the new year. I'm afraid people spent their 2026 tax refunds on Christmas in 2025.
That is an interesting point. I'm always a little worried about the consumer, but I've been wrong and they've continued to surprise me. Stephanie, I'd love to broaden it out a little bit because you've got a target for us for the S&P 500, which to me looks relatively bullish based on where we sit right now at around 6860. What are you thinking for the new year?
Yeah, we have a target of 7,500 for next year. That's our base case. We do have a bull and bear range around that of around 7,200 to 7,800. We're right in the middle of the pack, actually, of all the strategists, and probably similar to what you may hear from others. We are aligned with the view that we will see strong earnings growth from, tech sector, but actually discounting less than what consensus is. Consensus is at 27% right now for 2026 earnings growth, and we're sort of pulling that back and saying we expect to see higher earnings growth from some other places. So we're aligned with the view that we will continue to have a steep yield curve, and so we like regional banks, for example, and expect financials to do a bit better than expected. And the consumer story is actually something we've been positive on for about a month now. And a lot of that has to do with the fact that we have this thesis around investing aligned with fiscal policy. And we think 2026 actually will be a year that fiscal policy will be around this theme of keep the customer happy, keep voters happy. And we think the consumer will benefit from that in 2026.
So I will say, I've been positive, viewers should know, I've been positive on the consumer for some time now. But to Drew's point, first of all, it's always a good day when Drew Mattis says he agrees with you. Drew is one of the best. But I will sort of meet in the middle here.